Hi everyone, good morning. Welcome back. Hope you all had a good weekend. You all studied. I hope that you all have studied well, whatever we did in the last week. Am I audible to you all and can you all see my screen? If yes, just hit the like button or share with me on the chat box. So FM we have finished last week. I hope you all have revised it completely in this weekend, Saturday, Sunday, over. Okay. All right. So since now you all can see my screen and I am audible, let us begin. Okay. So this week we are going to target doing marathon on corporate accounting. All right. Today I am going to take up the most important chapters in this marathon. So before we begin, just giving you a brief up on this marathon and the timetable which is going to be there. It is going to remain the same like of FM. So here I have shared with you all for corporate accounting it will be 13, 15, 17, that is today, Wednesday and Friday. Okay. Corporate accounting is 60 marks for the ones who are there in new syllabus, right? 60 marks for the new syllabus. It's a paper along with the financial management. But do not worry, even the old syllabus students can attend this. I have covered everything in the marathon, all the important chapters. But the most important thing which I have been sharing with you all and I want to share it again today is my gift to you all as a dream batch. Okay, go ahead, subscribe to this dream batch with a minimal amount. You will have access to all my lectures until your exam date. So whatever best possible I can, I will cover it in the marathon. That will give you an entire revision of those chapters. But for the other chapters and for more practice, okay, you can go ahead and subscribe to the dream batch, take up those lectures. You will have multiple views on each of the chapters. Okay, you can go ahead and keep revising from there. Once I finish a chapter in marathon, you can go ahead and see that from the dream batch videos. Okay, so you will have access to this lectures until your exam, unlimited views over from you can view it from your phone or from your laptop, everything. And of course your marathon is going to help you revise all these chapters. Now I am giving you 3 hacks like how we had with financial management to clear our CA paper, okay, corporate accounting paper, and score more. What are we going to score? We are going to score exemption marks more than 60. I will say you all are going to get more than 70 marks in this paper, even if it is a separate corporate accounts and management accounting paper, or if it is a paper with FM for new syllabus, old or new syllabus, you are going to get exemption marks in this. The first important hack, okay, is we are going to do issue of shares and consolidation of accounts. Issue of shares along with the other parts, okay, of issue of shares is good 16 to 18 marks of your entire syllabus, entire marks, okay, for even for the new ones out of 60. And consolidation of accounts is another 10 marks. So we are going to complete with 40% in marathon only. And then there are other chapters like debentures, cash flow, accounting standards theory. Okay, these are other important chapters which you have to focus while you are going to give your exams. Okay, this will help you get exemption marks. If you do this properly with my marathon and the other dream batch lectures for more practice, you are going to get exemption marks in this particular paper. Okay, so this important chapters I will be covering in the marathon as well as they are there in dream batch in detail. Okay, hack 2, please do not skip the theory chapters. Like for your new syllabus, if you see new or old syllabus, there are first 2 to 3 chapters and accounting standards, which are theory chapters, you have to read them well. All theory questions are asked from those chapters. Other chapters, there is theory in the module, but they are more on the practical front. Okay, we are supposed to solve the practical questions given from there. Okay, so do not skip any of your practical chapters. And your third hack is, we are going to say this positive statement. It is a very, very interesting subject. Corporate accounting is my favorite subject. Okay, I really like it. I don't know why people find it difficult, debentures and all. If you have got the base idea of what has to be done, everything remains the same, like how we had in financial management. And as company secretaries, as professionals, okay, it is not only the job of CA to know accounts. As company secretary, when we are signing the financial, the annual returns, financial statements, accounting statements are the part of annual returns. We need to know how to read them. We have to know the changes in the share money. We have to know how much allotment is done. Correct? As a company secretary, I have to know the amount of net profit. Otherwise, how will I do compliance on CSR? Everything is interconnected. Okay, so accounting is an important subject, okay, across your entire professional life. Clear here? Now we are going to begin. So I hope you have your pen, paper, book, calci, everything around. Okay, so we are going to start with an important chapter today, which is issue of shares. Okay, this is the most important chapter from your corporate accounting syllabus. Okay, now when I'm talking about issue of shares, okay, what do you all understand by shares? As per the knowledge you have of company law, what is shares? Or anybody can name the types of shares? Come on, wake up, answer my question. What is a share and what are the types of shares you all know about? You all can hear my question, right? So you all have to even answer that. Put it in the chat box. Okay, you all know about equity shares. You all know about preference shares. Okay. Okay. But what is a share? Okay, share is a share in the capital of the company. Very good. Share is the share in the capital of the company. So first I want to take you all to the basics of understanding what is issue of shares. Okay, so see here. Okay, issue of shares. Now basically, whenever a company needs capital, so they invite people to subscribe to their shares, and then when we have a share in the capital of that organization, it is known as a share, equity share, or it can be in form of preference shares also. So it is one of the mode of gaining capital from the public, one of the source of our capital for company. Okay, so issue of shares is basically company issues shares for subscription to public in order to raise capital. Understand the basics first. Okay, once your basic is clear, we will be able to solve a given question. Okay, so I'm going to take you all through the entire journey of when the company issues prospectus and how does the issue of shares take place with all the journal entries. We'll first do our basics clear. Okay, in issue of shares, okay, we know we have two types of shares. We know equity shares, we have preference shares. Okay, equity shares where dividend is based on whether the company is earning profit or not, dividend payout ratio. Preference shares have fixed rate of dividend every year. Okay, they have a right to vote only on those matters which affect their particular preference shares related matters. Correct? And equity shareholders are known as the owners, okay, of the company. Now, when a company issues share, there are two reasons. One is for cash and the other is for consideration other than cash. Means it is for a purpose served to an organization. Company has taken the services, but instead of giving them a payment, okay, we are giving them shares. Instead of giving them cash amount, money amount, we are issuing them shares. For example, promoters, we give them shares of that company. So it is for consideration other than cash. Company is not going to get any money here. Even in accounts, whenever we are solving any problem or whatever I am explaining, it has to be from the company point of view. You are an organization. Okay, think like that. Okay, so if I am giving shares to promoters, company is giving shares to promoters for consideration other than cash. To vendors, I brought plant and machinery. I am a new organization. Okay, I am just incorporated. I don't have that much of money to give it to my vendor. So I am telling my vendor, I'll give you shares of the company. I will make you a shareholder. Then I am purchasing business. For that time also I will give shares. Okay, or I want to give shares to my equity shareholders in form of sweat equity shares. Sweat equity shares, okay, as the name suggests, it is for the hard working employees who are serving you, the technical know-how, their knowledge, and they are responsible for the growth of the organization. We give them shares. Instead of taking cash from them, we give them free. We make them also owners to certain extent, so that they get that feeling of responsibility that yes, this is our organization. Okay, coming to shares issued for cash, that means I'm issuing to public. I want cash to run my business. Simple. So I can issue cash, issue shares at par, or we can have shares issued at premium, or we can have shares issued at discount. But as per Company Act 2013, shares cannot be issued at discount. It is disallowed by law. However, it can be done if we are giving to employees for a discounted rate. Okay, employee stock option schemes. Okay, employee stock purchase schemes. If we have come up with those type of schemes, yes, over there discounted rate of issue of shares is allowed. Or if we are doing reissue of forfeited shares, I will come to that later. Forfeiture and reissue, we will come to that at a later stage. Right now, understanding what is at par and at premium. Okay, so say the face value of my share is rupees 10, but when I am issuing to public, I am taking 12 rupees from them. So here the issue becomes at premium. Where issue price is greater than the face value, you have rupees 2 premium which is there, you are taking on the shares. That will become shares issued at premium. Shares issued at par, where the face value and the issue price is the same. Okay. So now whenever these shares are issued, whether at par or at premium, there is a method of taking money from the public. Not all the money is taken once, unless you are buying in the secondary market. Means already the shares are there in the market and you are buying from another shareholder and the sale is happening between two shareholders. I am talking about the primary market, when the company has come first time to the public. Okay, you are the first holder. Primary market related accounting treatment we are going to see. Okay, so as a company secretary, I am more interested in seeing how these shares are being issued by the organization and whether the accounting treatment is as per law. Okay, so say second thing, one very other important thing is that whenever we issue shares as an organization, as a company, we have to have minimum subscription of 90% of shares. Otherwise, our issue fails. We cannot take money from public. We have to refund it. So what do I mean by this minimum subscription? Say we had come up with 1,000 shares, okay, for issue in the public. Minimum we need 90%. Fully subscribed means what? I got applications also for 1000 shares. Fully subscribed, totally. 1000 shares I had removed for allotment. Okay, and I got also applied. 1000 shares I got application. Under subscription means what? I had floated 1000 shares in the market. I wanted 1000 shareholders, but only 800 shares were applied for. Here comes the role of the underwriters. Okay, if time permits, I will do underwriters accounting treatment also, liability of underwriters. Why are underwriters appointed? So that whenever an issue does not reach to its minimum subscription, the balance, okay, the liability which is remaining, underwriters take up that liability of subscribing to that shares. Then later on it is available in the market. Okay, correct. So if the underwriters subscribe to this amount of percentage which is remaining unsubscribed, this issue is protected from failure. Otherwise it will fail. Company will have to refund it if they don't get this minimum 90%. See, in a second case it is undersubscribed. Only 800 shares were subscribed. I will have to refund all this 800 shareholders their money back. Okay, for this 800 shares. But say if I would have underwritten, I would have appointed an underwriter. He would have taken care of this minimum subscription. He would have taken care of this shares, 200 shares which are not taken up by public. He will take it up. We pay them a commission. Okay, companies pay commission to these underwriters. Okay, it is their work only. It is their business only to buy shares, and then they sell it in the market later on in the secondary market. Okay. Next is oversubscription. I have only 1000 shares as a company to allot, but I got 1500 subscriptions, like a college. Okay, college has got 100 seats for admission, but they got application from 200 students. How will they accommodate? They will have to reject the 100 students, right? Or they give admission on pro rata, but admissions cannot happen on pro rata, no? Admissions cannot happen. They have to select, they have to kind of filter those students, those 100 students which they are going to take in their college. Same thing is with the shares. If there is oversubscription, either you refund those 500 extra which you have got, or you try to adjust them. Adjust means what? Say if there is a shareholder, okay, there is only one shareholder, he only applied for 1500 shares, say so for example. So I will do allotment on pro rata, means if he has applied for 5 shares, we will give him, 3 shares. The ratio is, if we will give him, if he has applied for 3 shares, we will allot him only 2 shares. We will do pro rata allotment. Okay, so that all the shareholders are happy. Everybody got it. Clear? Until now, before I move on to the accounting treatment, 2 important concepts: issue of shares at par, premium, discount. Okay, and shares when they are issued, minimum subscription is 90%. Okay, these 2 important concepts, have you all understood? Issue of shares for cash, for consideration other than cash, and the second one is issue of shares for at a minimum subscription. So fully subscribed, undersubscribed, and oversubscribed. Okay, if you all want to take a screenshot, I'm keeping this on my screen. Okay, you all want that part 1 also here, issue of shares. Cool. Come on, quickly. 10 seconds. Come on. Now I am beginning with the accounting treatment for issue of shares. Okay, now understand one thing. In shares, whenever shares are, like public is invited to subscribe for the share capital, there is some money which the money is always taken into stages. Okay, I don't need the entire capital right now, I need capital in stages. So first, whatever money, like how you go and take a college form, application form, then you get the allotment, right? So similarly is with the company shares. First you apply, at that time you pay for that application form, 2 rupees, 5 rupees, whatever, based on what is the face value and issue price of the company. Then the allotment stage comes in, where they allot the shares, they give you the shares, that time you pay some amount. Then whenever call is made, whenever the directors and the management feel that okay, now we need to call the balance amount to run our organization, or we have to invest in some project, accordingly stage wise the money is collected on shares. Okay, so say I have taken an example, a company is issuing 100 shares for rupees 10 each. First situation is at par, second is at a premium of rupees 2. When I say it is at par, that means the face value and issue price is the same. Only when issue is at a premium, issue price will become 12. However, the face value is 10 rupees. Now at the application stage, okay, I am taking this first issue is at par. Okay. Okay, issue is at par. 10 rupees is the face value, issue price is also 10 rupees. Each stage has to be recorded. Okay, each stage has to be recorded. Now what does that mean? Application stage, allotment stage, first call stage, final call stage. Sometimes some organizations, they take application and allotment money together. First call, final call money together. Okay, or they just do only final call. They don't do first and final together only. Okay, depending on the organizations and depending on what they have asked us to do in the question. Right now I am doing 100 shares at par, 10 rupees is the value in the books of ABC Limited. Each stage has two journal entries, receipt and transfer. Receipt means money coming in the bank. Transfer means I am putting that money in the share capital account. Simple. Two entries, receipt and the transfer. Okay, so starting with my application stage. In my application stage, I am going to get 2 rupees on the shares. Correct? So bank account debit to share application account. Why did I get money? Because of application money. How much money? 100 into 2. 200 rupees. Now this application is for what? For equity share capital. Right? So I am going to transfer it. Share application account debit to equity share capital account, 200 rupees at face value. Share capital is always recorded at face value. Is always recorded at face value. Okay. So at face value equity share capital, right? And share application money. Next is allotment stage. Okay, now when I will go to my allotment stage, I will first do the transfer and then the receipt will take place. Why? Because obviously I will be doing allotment to the applied shares, no? So I will first do the allotment and then the money will come in the account on a given date. All this happens date wise, okay, chronologically. Okay, so I will first do my transfer. So it will be share allotment account to equity share capital, simple. Okay, what it will be, the amount, since this is not at a premium, simple. Share allotment, I am taking how much? 3 rupees, no, on share allotment. So share allotment account debit 300 to equity share capital 300, because the issue is at par, right? This will be my journal entry. But what if my issue was at a premium? Okay, pay attention. What if I am taking 2 rupees premium at allotment stage? I am taking 2 rupees premium at my allotment stage. So whenever there is a premium taken, that premium is always recorded in the transfer entry. Premium is always recorded in the transfer entry of that particular stage. I am taking it on allotment stage. Generally, premium is taken on the allotment stage unless mentioned. Okay, so this 2 rupees I am going to take on my allotment stage. So my transfer entry will now change a little. What will happen is, share allotment I am going to get total 5 rupees. 3 is on my share capital plus 2 rupees is on my premium. So total 5 rupees on 100 shares. Equity share capital is always at the face value I told you. So 100 into 3 on face value. 2 rupees of security premium is going to be adjusted. It is going to be written to securities premium account. It appears as a reserves and surplus in the company's final account statement. Right, when we make the balance sheet, securities premium account is quoted separately. Okay, for the companies to know that how much they have in that securities premium account. Security premium account is a very important account with relation to compliance under Companies Act. Where you can use that securities premium account, where you cannot use it. Okay, so securities premium account is an important account when it comes to compliances of the company. Clear? So I have done my transfer entry of allotment stage. Now receipt is very simple. Bank account debit. Okay, bank account debit, as if it is not as per premium, I have done it as per par. Okay, so bank account I'll get 300. To share allotment 300. Share allotment account close. Okay, or it can be, you can, if it was at premium, here I'll get in the bank account 500 rupees. To share allotment account 500 rupees if it was at premium. Okay, I'm doing both side by side. Finish. Application stage is over, allotment stage is over. Okay, only in case of application stage, receipt is done first and then the transfer. For rest all the other stages, first transfer it and then record the receipt entry. Okay, now first call rupees 2 I am taking. Same. Share first call account debit 100 into 2 to equity share capital 200. Okay, then you will say bank account debit to share first call account. Bank account debit, bank account debit to share first call account 200 rupees. 200 rupees. Okay, same thing now for share final call also. First I will record the transfer entry and then I will record the receipt entry. So share final call account debit 3 rupees I am collecting on 100 to equity share capital, and then bank account debit to share final call account. Bank account 300, share final call account 300 rupees. 8 journal entries. Okay, for a vanilla issue. Application, allotment, first call, final call. Whether if it is at premium or at par. Okay, this was a vanilla case. Now what happens if I tell you in the same example, I tell you that Mr. X, he was holding 50 shares. How I came to know holding 50 shares? Because we have allotted him. But when the time came to pay the first call and final call money, he is not paying only. So there is a protocol. Okay, there is a process of sending the call intimation that okay, the directors are going to send you letters that there is a call money. We are asking you all to pay the call money on your shares which you have subscribed and we have allotted. So kindly pay your first call and final call. Then they send you a reminder once again. And then in the second reminder, first they tell you to pay. Then they send you 2 reminders when you have not paid. Then they inform you that, see, now if you will not pay, we will forfeit your shares. What do you mean by forfeit is that whatever money you have paid until now, that we will not refund. And we will also cancel your name from the shareholders list. Why? Because you are not paying. Forfeiture. Okay, any earnest amount, we do a deal, we pay any earnest amount. Then they inform us that, see, this earnest amount now we will not refund if you will cancel the deal. Correct? Same thing. That if Mr. X, he was holding 50 shares, we are giving him reminders, he is not paying, we will forfeit your shares, sir. Okay, so now what happens when he does not pay me that first call and final call money? Entry will change. Which entries will change? Only the receipt. Bank account will get affected. Okay, amount, allotment, first call, everything will go same. Share first call, transfer will remain same. Okay, 200 rupees, 100 shares and 2 rupees is the value. But now the first call bank is going to change here. Why? Because what happened is there is calls in arrears. There is one Mr. X who is holding 50 shares and he is not paying me this 2 rupees. In bank account I am getting only 100 rupees. Okay, he is still my shareholder. Share first call is done over here. See, transfer has already taken place to equity share capital. But when in my bank account it hits, I am getting only 100 rupees. Same thing happened when final call stage came. He did not pay me my final call also. So here I am going to write calls in arrears, account debit. See, for those who are giving MCQs as per old syllabus, you all don't have to worry about what you are going to write. Why you want to write only? It's a MCQ paper. But for those who are in the new syllabus, please keep in your mind, you are supposed to pass journal entries. You are supposed to make the columns of date, particulars, LF, amount debit, amount credit. Please, for these small things, do not lose your marks. They are important. You are also supposed to write the narration, being so and so. We had learned this in childhood. Okay, being so and so. Okay, so now in the bank account, in my final call stage, what has happened is I am going to get money only on 50 shares, 3 rupees, 150. Why? Because Mr. X, who is holding 50 shares, is not paying me my 3 rupees. Clear? Until calls in arrears. Okay, so if there was a vanilla case, no calls in arrears, everything is fine. Even if there is calls in arrears is always recorded in the receipt entry of whichever stage there is. There is in final call stage, first call stage. Okay, in the receipt entry. Securities premium is always recorded in the transfer entry. Clear? Okay. So there is 8 journal entries, 2 journal entries for each stage. Okay. Now I am moving a little forward. Now since this Mr. X, he is not paying me, what will I do keeping his name in my shareholders ledger, the shareholders journal which is there? Okay, what will I do keeping that shareholder's name? I will have to cancel it. I will forfeit his shares. Forfeiture means what? That whatever money till now I have got from Mr. X, I will keep it and I will cancel his name. Okay, so share forfeiture account, I am cancelling the share capital. When I will cancel it, when I was taking in equity share capital, I credited. Now I am cancelling it, so I will have to debit. So equity share capital account debit. How many shares I am cancelling? 50. Face value is 10, so 500 rupees. 2 calls in arrears. The unpaid amount. How much is his unpaid amount? 5 rupees. Why? Because first call 2 rupees and then final call 3 rupees. Total unpaid amount is 5 rupees. So 50 into 5, 250. You can take it up from here also. Calls in arrears was 150 over here, and it was 100 in the case of first call. 100 and 150. 250. Share forfeiture is the amount paid on the face value of the shares. I've written every little detail. How much is the amount paid on the face value of the shares? Application, allotment. Okay, first call, final call, so he didn't pay only. Application stage it was 2 rupees, allotment stage it was 3 rupees. How much he has paid? Yeah, if I am taking this at the premium also, I am asking how much he has paid on the face value. He has paid 5 rupees on the face value. 5 into 50. Share forfeiture is always recorded at face value. So 250. Okay, only if securities premium is unpaid, it will be recorded in the share forfeiture entry. Otherwise, it will never be recorded. Okay, if securities premium is paid, it will never be recorded. If securities premium was unpaid by any chance, then we will record that in the share forfeiture entry. Okay, see here, I have just changed the situation a little bit. What has happened is application stage 2 rupees, allotment stage is 3 plus 2 because share was issued at a premium. First call 2, final call 3. This is what I have told you. I have given you this example. Okay, now what has happened? Mr. X applied. But after application, he is not paying my allotment also. He is not paying my first call also. And he is not paying my final call also. So, calls in arrears will begin from allotment stage. Right? Calls in arrears will start from allotment stage. So when I will forfeit his shares, my share forfeiture entry will now change. Okay, because he is not paying me all this money, allotment, first call, final call on 50 shares. What will happen here is equity share capital account debit. I am forfeiting 50 shares. Face value of my shares is 10. So 500 rupees. There is a securities premium which is unpaid. I'll have to cancel that securities premium. Right, because in allotment stage transfer entry I already credited. So now for that amount I'll have to debit it because it is unpaid. So on 50 rupees, 2 rupees is the 50 shares, 2 rupees is the premium. So securities premium account debit 100. Calls in arrears, unpaid amount, total unpaid amount of Mr. X. What is the total unpaid amount? 3 plus 2 plus 3 plus even this 2 is unpaid. Right? So 6, 7, 8, 9, 10. 10 rupees is totally unpaid. Total unpaid amount total. Okay? Including the securities premium. So 50 into 10, 500. And share forfeiture is the paid amount on the face value. So on face value, how much he has paid? Only 2 rupees. So 2 into 50, that will be 100. See, now the journal entry will tally. Debit will tally with the credit because there was securities premium unpaid. Clear? Okay. Now this shares I am not keeping with me. I have got one Mr. Y. He is ready to take up my shares. But he is telling me, he is giving me only 9 rupees for 10 rupees share. So now the reissue is at discount. Face value of the share is 10. But when I am doing the issue, I am doing at rupees 9. So I am giving a discount of 1 rupee. Correct na? So in my bank, how much I will get? 50 shares, 9 rupees. 450. But equity share capital, so it is always at face value. So 50 into 10, 500. That means there is a discount or loss on reissue. This is known as loss or discount on reissue. How much it is? 1 rupee on 50 shares. So that I will write off from the share forfeiture account. Okay, I will use that share forfeiture to write this off. whatever balance is then remaining in the share forfeiture account, that I will transfer it to the capital reserve and close my share forfeiture. Why? Because these shares, 50 shares which were forfeited, they have already been reissued. So now I have nothing to do with my share forfeiture. It is to be completely being closed. So whatever loss is there on reissue, I have written off with the help of share forfeiture. Now in share forfeiture, I had 100 rupees. This loss was of 50. Okay. So 50 rupees is remaining. I'll transfer it to the capital reserve account. It is very important. Okay. Closing of your share forfeiture account is very important. Share forfeiture account debit to capital reserve. That will be your 11th journal entry. 8 journal entries are for all your 4 stages. 9th begins when you forfeit. 10th is for the reissue. And 11th is for the transferring of your share forfeiture account to capital reserve account. For old syllabus also, you will have maximum questions in MCQ asking you the amount to be transferred to capital reserve. So basically you will have to know everything. How much is the share forfeiture due to the forfeiting of the shares? How much was the reissue? Whether there is a loss or no on the reissue? What is the balance left in the share forfeiture? That you will have to transfer it to capital reserve account. I hope I have made myself clear with this entire example, of issue of shares. Anything additional which can be asked in this is regarding your pro rata allotment. That's it. Nothing more from this can be asked. If you know this, everything is clear. I have given you all the entire overall view for issue of shares. Okay. So you all have any questions to ask, please put it in the chat box. Anything which you all have not understood so far from these particular stages. 4 stages, then forfeiture, reissue and transferring share forfeiture to capital reserve. Okay. Anybody wants to take any screenshot or something, which page you all want to take, put it in the chat box. I will put that page on the screen. Come on, I have to move ahead. We have to do issue of shares completely. We have to finish this. If all okay to go, just put a thumbs up, so then I will start with the sums. I have not yet done any sum with you all, okay? Okay, I am scrolling up. Scroll up until where? Give me a particular entry, what you all want. Yes, I can explain the reissue again. Very much. See here. Okay. Reissue means what? The shareholder Mr. X, he was not paying me. I forfeited his shares. I am not going to give his money back also. So now I want to cancel his name. Okay. From the shareholders, members list, I want to cancel his name. I have Mr. Y who is ready to pay me 9 rupees on this shares. So I'm going to reissue it to him. Okay. So when I will reissue, I'll get money in my account at 9 rupees on 50 shares, 450. But my share value is 10 rupees. Equity share capital is always recorded at face value. That means there is 1 rupee discount which is there. So I can write it loss on issue or discount on issue of shares. I have written share forfeiture. Why? Because we have to write that off with the share forfeiture account. Okay. So loss on issue is 1 rupee on 50 shares. I have written that off. You can have 2 other, you can have 1 additional journal entry writing like this: share forfeiture account debit to loss on reissue. Okay. Now share forfeiture, when I forfeited, there was 100 rupees in my share forfeiture. I used 50 rupees for the loss on reissue. Balance I am going to transfer it to capital reserve and close my share forfeiture account. Okay, so reissue can happen at discount. I am scrolling up. I hope now understood. You all can tell me anything specific. You all can take this question if you all want to as a screenshot and then try to solve it. No, whatever I have explained you all based on that. You all have taken the screenshot, no? Now I can move forward. Okay. Sure. Come on. We will solve the sums. Okay, it is chapter 4 actually, not 3. Okay, in your new syllabus it is chapter number 4, issue of shares. So now P Limited was registered with the authorized nominal capital of rupees 10 lakhs divided as 1 lakh equity shares of rupees 10 each. The authorized share capital is 10 lakhs. Okay, means means when they have registered the company, okay, they have registered with 10 lakhs rupees as the capital. Now not necessary that entire 10 lakhs they have to issue and take money from public. They have authorized, that is a registered share capital. They have issued 50,000 shares. From that 1 lakh, they are issuing 50,000 equity shares to public for subscription. It was payable as follows: 3 rupees on application, 2 on allotment, 2 rupees on first call, 2 rupees, 3 rupees on the second and the final call. Okay, all the shares were fully subscribed and the money was duly received. There is no calls in arrears. Show the journal entries. Okay, so it is the same sum which we just did. Okay, just the number of shares is going to change. From one, I had taken 100 shares. Now there are 50,000 equity shares. Okay, so that is all what is going to change. So you all can try this sum as a homework sum. I am taking up a next sum so that even in the next sum all these journal entries will come only. But I just want to take something which is at a premium, and then there is a calls in arrears. So you get more comprehensive understanding. Okay, so this sum you all can just do it as a practice question based on the example what we did. Clear now? Okay. I am doing question number 2. Okay. In the B Limited issued 20,000 equity shares of rupees 10 each, and there is a premium of rupees 2 per share. That is payable as follows: on application 5 rupees is payable. Why? Because there is 1 rupee premium they are taking on application stage only. Okay, then there is on allotment they are taking again 5 rupees. Why? Because there is 1 rupee again payable on premium. So this premium of 2 rupees also they are taking in 2 parts. 1 rupee on application, 1 rupee in allotment stage. And then they are going and doing a final call of rupees 2. Okay, it is rupees 2. Applications were received for 24,000 shares. Letters of regret were issued for 4,000 shares and were allotted to the other applicants. Means there was a 20,000 issue. Allotment can be done for 20,000 only, no? Company has removed a issue only of 20,000. Now applications I received 24,000. So it's a choice. Company can do pro rata or they can reject the additional. Here they are rejecting it. Okay. Mr. A, who is the holder of 200 shares, he failed to pay the allotment money as well as the call money. His shares were forfeited. Show the journal entries and the cash book, okay, in the books of B Limited. Okay. Okay, so let's solve this. Okay, in the books of B Limited. Even for the old syllabus, students, unless you do not solve the questions given, you will never know the journal entries. If you will not know the journal entries, you will never be able to calculate the amount. So if you all are thinking it is an MCQ paper and we don't need to solve this, it is a big misconception. Okay, so please solve this with me. You will get a practice also. Correct? Solve this with me. Come on. In the books of B Limited, we have how many shares? 20,000. I'm writing the given. Equity shares of rupees 10 each, no? Face value. Issue price is rupees 12. Issue price. How I know that? Because there is rupees 2 premium. Okay, now they are collecting application money, then they have done allotment stage, and then they have done call money. Application they are taking 5 rupees, but on shares it is 4 plus 1 rupees including premium. Similarly on allotment also they are taking 5 rupees like this. Okay, and call money 2. So on the face value 10 rupees plus this 2 is the premium. I have written the given. I have got applications for 24,000 shares. From that, I am rejecting 4,000. If I reject, I will have to refund them the money. We can't keep it. No problem, let it be. And we do not do allotment also. Okay, so 4,000 we are going to refund them. So let us start with the journal entries. They might, if in case they give you like this, so then you will write date, particulars, ledger folio, LF, then debit, and then credit. Please do this, and then you have to write the narration also. Okay, come on. Starting with the first journal entry, application stage, we always do the receipt first. So we will say bank account debit to share application. Okay, now here I am getting money on 24,000 shares. 24,000 people have applied. They are paying me. How much they are paying me? Total 5 rupees, no, on share application. 4 plus 1. Okay, so in the bank, the company received 1,20,000. Okay, receipt entry is recorded first in the application stage. Then we go to the transfer entry. Now, when I will do the transfer, what I will have to write is share application account debit. So that the share application account closes 1,20,000. To equity share capital. Equity share capital I cannot do on 24,000. I have only how much? I have 20,000 shares which I can allot. Into what is the amount on the face value for? Okay, so it will be 80,000. Or else if you all want now, you all can write it here only in pencil. Okay, how many shares? 20,000. Face value 4 rupees. Always at face value. To securities premium account. How much is the security premium amount? 1 rupee. So this will be 20,000. I am going to refund money to the additional 4,000. So yes, from here I will write to bank account. Okay, for the refund. How much of refund? 4,000 shares into 5 rupees. 20,000 I will have to refund, reject. We did a reject, no? So we'll have to refund it. Clear so far to one stage, share application stage? Now I'm moving to my share allotment stage. Okay. Share allotment, first I will do the transfer. So share allotment account debit. Okay, on 20,000, 5 rupees. 1 lakh. To equity share capital, 80,000. Why 80,000? On 20,000, 4 rupees. And to securities premium account, 20,000. Why so? 20,000 into 1. Transfer entry of share allotment. Now the receipt entry. Receipt entry of share allotment, I'll have to be a little careful. There is something given over here. Mr. A, who is holding 200 shares, he has failed to pay allotment money also and call money also. So there is this 200 shares on which I am not going to get the money. Allotment money I will not get in my bank account. Okay. So basically there is calls in arrears on 200 shares. So bank account debit, receipt. At the time of receipt, it will be bank account debit. Okay. Calls in arrears account debit. To share allotment. Now share allotment, how much ever I have debited, I will credit that much, 1 lakh. Calls in arrears is on 200 shares. How much he has not paid me? Totally 5 rupees. So it is going to be 1,000 rupees share calls in arrears. So in bank I am going to get only 99,000. Correct, na? Why? Because I am going to get money only on 19,800 shares. As per 5 rupees. 20,000 shares were there. 200 share which Mr. A is holding, he is not paying. So I am going to get money on basically 19,800 shares only, 5 rupees. Okay. So share allotment done. Now final call. They have done first and final call, means together only. So I will write share call account debit. How much money are they asking on call? 2 rupees. So 20,000 into 2, 40,000. Now there is no premium or anything. It is over. Application stage there was premium. There was premium on allotment stage. To equity share capital account. First we do the transfer and now we will do the receipt. Okay, now when I do the receipt again, this Mr. A, who is having 200 shares, he didn't pay my allotment money, he is not paying my call money also. So same entry, bank account debit. Okay, calls in arrears account debit. To share call will be 40,000. Calls in arrears is on 200 shares. How much? 2 rupees. So 400. And then on 19,800, I am going to get 2 rupees. So it is going to be 39,600. Correct? I got only 39,600. Now they are saying that this particular shares were forfeited. They have not given me anything about reissue. So I will not do any reissue. I will just forfeit the 200 shares. Now when I am going to forfeit 200 shares, okay, I will have to have the understanding of how much is paid and how much is unpaid. So application, allotment and call. Application was 4 plus 1, allotment was 4 plus 1 and call is 2 rupees. Now I will be able to do the share forfeiture entry correctly. Okay, so equity share capital account debit. I am cancelling 200 shares. Face value of the share is how much? 10 rupees. So it is going to be 2000. This issue was at a premium of 2 rupees, right? This issue was at a premium of this amount is premium. If there is a paid securities premium, I will not record. But if there is an unpaid securities premium, to that extent I will have to record. No, so this 1 rupee he had not paid. Na, application money he paid, but then when it came to allotment, he did not pay me anything. That means this 1 rupee on securities premium is remaining unpaid. So unpaid securities premium is there. It will come in the share forfeiture entry. On 200 shares, 1 rupee was unpaid. Okay, 2 calls in arrears. Total unpaid amount. Calls in arrears is on total unpaid amount. Unpaid. How much is the total unpaid amount? 4 plus 2, 6 plus 1, 7 rupees. Right? So on 200, my 7 rupees is unpaid. That will be 1400. To share forfeiture account. Okay, paid amount on face value. How much is the paid amount on face value? Only 4 rupees here. Paid amount on the face value. Paid. It means 5 total. But paid on the face value is only 4. Okay. So 200 into 4. 800. So 2200. Debit, 2200 credit. Journal entry is correct. Clear? Share forfeiture. Now they are telling me to make cash account of this company, B Limited. Okay, so cash, debit what comes in, credit what goes out, debit and credit. So see your journal entries and then we will pass the ledger treatment. First was we received money on share application. So your bank account is debited. For what? To share application. So in my ledger I will write to share application 1,20,000. Then same thing, next entry we had refunded them the money. This amount we had refunded, no? Bank account, wherever whatever is there in bank account, no, that we will reflect in my bank account, cash and bank account. So 20,000 is credited. Why? Because if money has gone out. So you will write buy share application, refund. How much it is? 20,000. Then we received money to share allotment. In case of allotment, how much money did we receive? 99,000. Here. So that I will record. Then I received money due to share call. Right? Where is it? Here. 39,600. That's it. There is no other entry about bank account. So we will close this. Debit is more. It is 2,58,600. Calculate it if you all want. Add all. 2,58,600. So by balance, carry it forward. Okay. 2,38,600. That will become my opening balance. To balance brought down, debit 2,38,600. Clear? Any doubt in this question? Everyone? Clear, no? Anything you all want to ask, or you all have not understood from this particular problem? Come on, quickly, you all have to answer my questions. Only then I will be able to reciprocate and know that whether you are understanding clearly, you have any doubts. And you see, this is the right time to ask your doubt. I'm sitting here, I'm here to help you all. Okay? So please, anything is there, just tell me. Clear? All of you all, wow. I'm happy you all are understanding what I'm teaching. Okay, chalo. Next question. Okay, this is a little bit in detail. Now, Herbal Tea Plantations Limited was registered with a capital of rupees 1 crore. It was divided into equity shares of rupees 100 each. Okay. The company offered to public 50,000 shares at a premium of 20 rupees. The amount on shares was payable as rupees 25 on application, then rupees 50, including that 20 rupees premium, was taken on allotment, and rupees 20 on first call and 25 then on the final call. Applications were received for 75,000 shares. Shares were allotted to the applicants on the pro rata basis. They did not refund it. They did a pro rata allotment. Okay. Kantibai, who was allotted 500 shares, he did not pay the allotment money, and then he also failed to pay the first call. His shares were forfeited. Sheetal was holding 200 shares. She did not pay the first call, and final call was not made only. Make the journal entries in the books of the company. Okay. So we will write the given slowly and then we will sort. This is your question number 3. In the books of Mrs. Herbal Tea Plantation, right? Limited. Okay. I will just write the given. They wanted to issue how many shares? 50,000 shares. Okay. Application received is of 75,000 shares. Okay. Issue at premium of 20 rupees. Face value of the share is 100 rupees. How it was collected? Money was collected application, allotment, first call, and then the final call. Okay. How much was taken on the application stage? It was 25 rupees. Okay. Allotment stage was total was 50 rupees including premium. Okay. So if it was including premium is 20 na, and I'm taking total 50. So on allotment on face value I'm taking 30. Okay. Then how much is the share first call? 20 rupees. And then final call is of 25 rupees. Yes. So this makes 100. This is 120. This is 20. So issue price is 120. It is a little lengthy sum. There are a lot of working notes, but it will be helpful for us to solve the questions asked in exams. Okay. We'll start, and there is a pro rata allotment. Okay, now we will do the working notes. You all can leave some place, or you can leave one page for that working note and then do the journal entries with me. Okay, or else you can do the working notes as and when I am calculating and doing it. Okay, I will suggest leave that entire page, like where you have written all this given, leave that page for your working note. Clear? Come on, now journal entries. First, what will be the first journal entry? Receipt entry for application stage. So bank account debit to share application account. Right? Now share application, what has happened is I have received application on 75,000 shares. I am collecting how much money? 20 rupees? 25 rupees. Okay, so basically I am going to get 18 lakhs 75,000. Right? On 75,000, I am taking 25 rupees, 18 lakhs 75,000. Next, I am going to do the transfer entry. Okay, so when I'll transfer, I'll write share application account debit to equity share capital account. Okay. Now understand one thing. We did not refund this 25,000 extra, no? Shares available from the company side is 50,000. Application is received on 75,000. That means we did not refund or reject this additional 25,000. We have done a pro rata allotment. So when I say pro rata means what? Pro rata allotment means what? Applied to allotted, what is the ratio? Since application is 75,000 and allotment a company can do is only up till 50,000. So what is the ratio? 3:2. So if in case you have applied 3 shares, you will get allotted only 2 shares. So all the shareholders are happy. Okay, we are not refunding, rejecting anybody. Correct? So what has happened is whatever additional money when you receive in case of application, okay, additional money received in application, we adjust that with allotment. Okay, we adjust it because we are not refunding. Now what we will do of that additional money? We will not refund. So we'll have to now adjust since we are doing pro rata. With which stage I'll adjust? I'll not go directly to the final call stage. No, so I'll adjust with my allotment stage. So simple, when I will do my journal entry for transfer. Okay, this was the receipt of application. This is the transfer for application. Equity share capital will be of 50,000 only into 25 rupees. That is how much? It will come to 12 lakh 50. But share application is 18 lakh 75,000. Na? So this additional amount I will write share allotment and adjust it here only. Okay, additional on 25,000 shares, 25 rupees, this additional amount of rupees 6 lakhs 25,000, I will put it here only as a share allotment account. And then when I will receive actually the money in share allotment, I will do adjustment over there also. Understood what I have done? I am not refunding, no, this 25,000 shares. So I am adjusting it with the next stage, which is share allotment stage. Okay, now moving to the next journal entry, share allotment. Okay, so share allotment, first I do the transfer. So share allotment. You all have to write the narration. Okay, so in your second journal entry you can write, being share application amount transferred to equity share capital and additional money adjusted with share allotment account. Okay, you all can write the being. You all don't have to write very lengthy one, small also you have to write. You have to just see whether you have written the narration or not. Okay, narration is a must. Okay, now share allotment account debit. I will first transfer to equity share capital and I am taking securities premium also over here. Okay, to securities premium account. Okay, so on 50,000 share capital money is 30 and securities premium is 20 rupees. Okay, so this is going to be 10 lakhs securities premium. Okay, this will be 15 lakhs equity share capital and share allotment will be 25 lakhs. Okay, 50,000 shares into 50 rupees. Clear? Transfer entry of share allotment. Now the receipt entry of share allotment, I have to be a little careful. There is a calls in arrears also and there is also 6,25,000 here in the application stage, which I did not, this money is there with me. Okay, so when I will do my bank entry, I have to be a little bit careful. Now how? See, what I am going to do is, I am going to receive money, we all know, bank account debit, money we are going to receive on share allotment. We also know that there is calls in arrears. I am just writing the journal entry and keeping to share allotment. Okay, now how I am going to calculate the calls in arrears and how I am going to get the share allotment account. We know the pro rata. Okay, the ratio of applied is to allotted is 3:2. You all can go back on your working note page. Okay. Now Mr. Kanti, what have they given? Mr. Kanti was allotted 500 shares. He did not pay the allotment money. He was allotted how many shares? 500. And then he also did not pay the first call. Fine. I am yet doing the allotment stage. No, so I'll concentrate first on this. Allotment money was not received on 500 shares. Okay, Kanti Bai was allotted 500. So basically, Kanti Bai was allotted 500 shares. So what do you think he must have applied for? How many shares? Cross multiply. He must have applied for 750 shares. Okay, 750 shares were applied. That means he has paid me excess money on application. Excess money on application received from Mr. Kanti. How much excess money I must have received? 250, no? 250 shares were additional. He had applied for 250 more shares. He was applied for 750 and gave him 500. So he had applied for additional 250 shares, no, which he did not get. But he has paid the application money on that. And how much that was that amount? 25 rupees. So this will come to 250 into 25, 6250. This is an additional amount. Okay. And in case of share allotment, how much he had to pay us? He had to pay on 500 shares which were allotted. He had to pay us total 50 rupees, including premium. So basically he had to pay us 25,000. Therefore, net amount due from Mr. Kanti is nothing but 25,000 minus 6250. That will be 18,750. We have to do this adjustment. Why? Because the allotment has happened on pro rata. Mr. Kanti has already paid an additional amount which I had to adjust. Application I had to adjust in the share allotment. Correct? So I will have to do this adjustment also to know my calls in arrears. So my actual calls in arrears is not, we would have directly done no this 500 shares 50 rupees 25,000. No, it will be 18,750. Why? Because he has paid us extra 6250 which we had adjusted for this allotment. Correct? So how much money? Okay, now allotment money received. Working note again. Allotment money received. We have to calculate. Correct? So that will be allotment money due. How much is it is actually due? 25 lakhs is due. We just passed that journal entry. 25 lakhs is due. On 50,000 shares, 50 rupees we have to actually take. So this much is due. Minus received in application stage, which I had to adjust. How much I have received? 6,25,000 additional. So this I will adjust. Minus calls in arrears, which is how much? 18,750. So actual amount which I will receive will be 18,56,250. Once again I am explaining. Okay, Mr. Kanti was allotted 500 shares. He has not paid me my allotment money. So in the bank account I am going to get less money. In allotment stage, two things I have to take care this time. Why? Because there was an excess received in application 1 and one is this calls in arrears. Now to find the amount of calls in arrears, first I need to find how much money I had received. No, I am going to forfeit that money. So applied to allotment, the ratio is 3:2. They have told me that he was allotted 500. So that means he had applied 750 shares. It means he had paid application money on this 750 shares. So money which we have extra with us is 250 into 25. That much I will adjust it with his allotment money which is due from him. Okay, 500 into 50, 25,000 is due. But we have already received extra of 6250 for application stage. So actual calls in arrears is 18,750. Okay, and allotment money which I will receive in my bank account due is 25 lakhs. But there was an adjustment of 6,25,000 for application stage and there is calls in arrears. So actual amount which I will get is 18,56,250. Okay. So here the journal entry will be in bank account. It is going to be 18,56,250. You all can mark this as a star and put working note over there. Okay, calls in arrears 18,750 and share allotment will obviously be 18,75,000. How? See, there is share allotment here 25 lakhs in debit. There is share allotment in credit 6,25,000. Okay, so 25 lakhs minus 6,25,000. 18,75,000 will be this credit. Only then the share allotment account will close. Okay. Any doubts so far? am moving forward. Okay, then if there is any doubt or any question, I'll solve it. Now they are saying share first call was made. Okay, how much is the first call money? They are asking 20 rupees, na? Okay, so they have made the first call. So fine, first I'll do transfer. Share first call. Okay, account debit to equity share capital. Simple. There is no premium over here. So on 50,000, they are taking 20 rupees. 10 lakhs, 10 lakhs. Okay, now there is calls in arrears. Mr. Kanti to did not pay only. Allotment also in first call. There is one more lady, Sheetal. She is having how many shares? 200 shares. So your calls in arrears will now be on total how many shares? 500 plus 200. That will be on 700 shares. Okay. Right? So chalo. Now pass the journal entry. It will be bank account debit. Okay. Calls in arrears account debit. I hope you all know my short cuts, okay, short forms which I am writing. You all are not supposed to write like this in the exam. Okay, calls in arrears account debit to share first call. Share first call 10 lakhs. Calls in arrears will be on 700 shares. How much is the money we are asking for? 20 rupees. Okay, so 14,000 will be calls in arrears. So the balance amount I have received in bank 9,86,000. Correct. From 50,000 shares, 700 have become now calls in arrears. So basically it is 49,300 shares into 20. Why do you think I am writing this small details? For all you old syllabus people sitting, okay, you are asked these type of questions in MCQ. On how many shares is the amount received? Then you all will sit and think. You don't have to think. You have to pass this journal entry and it is easy. Immediately you will get the answer. So this is being call money received. Now what has happened is company has done a very unique thing. They did not go and do the final call. They have told final call is of something like rupees 25. They did not do only that final call. See, I'm just writing it over here again as a working note. Application, allotment, first call and final. Okay, application was 25, allotment was 50, 30 plus 20, no? And first call was rupees 20. Final call of 25, no, they did not make it only. And they forfeited the shares. They did not make the final call and forfeited. Now, since you have not made the final call, so when you cancel, you will cancel only until the paid called amount. What do I mean by that? So now I have to pass my share forfeiture entry, right? Share forfeiture entry. It will be equity share capital account. How many shares I am forfeiting? I am forfeiting, I think so, only Mr. Kanti's shares. Just let us read it. Otherwise it might go wrong. Okay. See here. His shares were forfeited. Sheetal was holding 200 shares, did not pay the first call. Final call was not made. Now his shares were forfeited means only Mr. Kanti's shares are forfeited. Okay, only these 500 shares are forfeited. So what will happen is equity share capital on 500 shares, I will not do full 100 rupees. 25 is not called up only. This will make 100. This is not called up. How much is called up? 75 is called up. So 75 only I can cancel. If I would have called up and not paid, then yes, I could have forfeited it. So 500 into 75 is 37,500. Unpaid securities premium, yes, it is there. Mr. Kanti to did not pay me my allotment money only na year. He failed this payment, right? So on 500 shares, he did not pay me my security premium of 20 rupees. So 10,000. 2 calls in arrears. I will take calls in arrears of only this 500 shares. Okay, 500 shares calls in a paid amount. Total paid amount is only 25 rupees. Rest everything he is not paid. Okay, so 500 into 25. 12,500. Sorry, no, I'm very sorry. I am doing calls in arrears, no? So total unpaid amount. Total unpaid amount. I'm very sorry. Calls in arrears is the total unpaid amount. So total unpaid amount will be 30 plus 20 and plus even this 20. So 50 plus 20, 70. Okay, so on 500 shares, total unpaid amount, total unpaid amount is going to be 35,000. 2 share forfeiture. 2 share forfeiture account, it will be how much? On 500, amount paid on the face value of the share is only 25. So 500 into 25, which will be 12,500. See, now it is tallying debit and credit. Sorry, it is tallying, no, now. If I would have done, okay, by mistake, if I would have taken the entire 700 shares are forfeited, it would have gone wrong. They have told me specifically only 500 shares were forfeited. Okay, so I will pass the journal entry also for 500 shares only. Clear, everybody? Okay, so there were 7 journal entries in this sum. Anything which you all have not understood from this given question? And if everything is understood, just give me a thumbs up so that I can move forward with the other questions now. Come on. Anywhere you all have to take any screenshot or something, or you all want more 10 seconds, I'll give you that. Okay. Fine. Good. Everybody has understood. Okay. Now I am doing some past exam questions based on issue of shares. Now, though they are from the MCQ format, but if you will see, when we will solve it, they are very much likely to be asked in your full written paper also. Okay, and yes, in case of issue of shares, they will ask you question of this type of only pro rata allotment, and there will be a forfeiture and reissue. Okay, Hence, you all need more practice. So please go ahead and take up the dream batch if you all have not yet done that. You all can revise more and more in detail certain problems which are there, and I have done it. Okay, otherwise, if in case you have already done your self study, you will have already done the from my lectures or from wherever, and you all are knowing the other concepts, everything I have covered, all the concepts I have covered. But if you need more practice, then yes, you have to go ahead and do it from the dream batch. Otherwise, your marathon should suffice for your revision. Okay, so yes, they ask, they are not complicated questions. Okay, uh, they are nice questions. So basically the first question which is there on issue of shares, no, that is what they are asking you a little bit of more in detail. So yes, it is going to be there a little bit of challenge in the paper. Okay, that is 10-20%. But when you will read the question twice, no, you will understand, oh, everything is given. You really don't have to put in that much of brains. It is not that difficult. If you have not understood a given question at one go, no, read it again the second time. Write your given properly, and you will feel, you will, that time only you will understand, oh, half of the things are already given. You will be able to solve it. Okay, there are more details given in the question. That does not mean it is complicated. It could be rather simple. Okay, so don't panic. If it is difficult, yes, it is a professional paper, some challenge is going to be there, but you can face it and you can overcome it with my lectures. Okay, come on, now we are going to do a few problems. First one, Shiva Limited has forfeited, one second. Shiva Limited forfeited 4,500 equity shares of rupees 10 each, which were issued on 40% pro rata basis for non-payment of allotment money of 6 rupees, which is including a premium of 2.5, and the first and final call was 3 per share. If excess money received on application is used for receiving the amount due on securities premium, what amount should be credited to the share forfeiture account? Now, complicated, but it is not at all complicated. I'll tell you why. See, we are going to solve this with the given. So this is your first question. Application money, allotment money, first and final call, they are doing it together. Okay, now they have given me a few details. They have told me on allotment they are taking 6 rupees, which is including 2.5 as premium. So when 2.5 is premium, on share capital I am getting 3.5, and final call they are taking 3 rupees. That means on application how much money am I taking on face value? 3.5 only. Then this will become 10 plus 2.5 will be the premium. Simple, face value is 10. 2.5 is the premium amount. Okay, now 4,500 shares were allotted. And this allotment is 40% of what was being applied. So if I want to remove the ratio, applied is to allotment ratio. Okay, so basically they are saying, so basically 4,500 shares applied is to allotment ratio we have to remove. So there is 4,500 shares are there, which is how much? It is 40%. Okay, 4,500 is 40%. So 100% is going to be how much? Okay, this is 40%. So 100% it is going to be how much? So I'll cross multiply. Okay, 4,500 into 100 divide by 40. So basically how many shares must have been applied for? 11,250. Okay, so I can say therefore application money received, how much it will be? 11,250 shares into 3.5, that will be 39,375. Okay, this is the application money which I must have received, no? Now in the problem they are saying there is a calls in arrears. Okay, now calls in arrears, let me just read this again, once again. Okay, forfeiture has happened of 4,500 equity shares for non-payment of call money, allotment money, and first and final call also. Okay, and then whatever money was to be received, excess money on application, it was actually adjusted for the due of securities premium. Okay, so now 4,500 shares are to be forfeited. Now calls in arrears will be how much? Calls in arrears, an allotment I had to receive 4,500 shares. Okay, on that, sorry, 4,500. Okay, 4,500 into rupees 3 is first and final call, that will be 13,500, and 4,500 rupees 6 is the allotment money, that will be 27,000. Okay, there is an unpaid securities premium, unpaid securities premium on 4,500, 2.5 is unpaid, that means 11,250 is unpaid. 4,500 into 2.5, 11,250 is unpaid. Therefore amount to be transferred to share forfeiture account is nothing but total receipt minus securities premium unpaid. They are telling me that whatever securities premium unpaid is, that they are adjusting with the additional amount received in case of application money. So how much is the total received in case of application? 39,375. How much is the securities premium unpaid? 11,250. Okay, so balance will be 28,125 rupees. That will be transferred to the share forfeiture account. Otherwise what we used to do is, we used to do equity share capital account debit. This was our journal entry. Okay, so basically we were cancelling 4,500 shares, 10 rupees is the value. I am showing you this so that you understand what have they asked in the question. Then securities premium account, whatever is the unpaid securities premium. How much is the unpaid one? We just calculated 4,500 into 2.5. 11,250. Correct? 2 calls in arrears. Calls in arrears I did for you all over here. See this. 13,500 plus 27,000. Okay, so that comes to 40,500. To share forfeiture account, it is always the paid amount on the shares. Okay, so basically how much is the paid amount on the share? Only 3.5 was paid. So 3.5 is only paid, no? So that will come to 4,500 into 3.5. That is how much? 15,750. Okay, this is what we have done. Correct? Now they are saying, in this question they are saying that whatever is excess money, okay, which we have received, I found out, right, whatever is the excess money, application money which I have received, okay, is 39,375. From that I will adjust my 11,250 as my securities premium unpaid, and whatever is the balance remaining, that we will transfer it to the share forfeiture account. Okay, so this is what they are trying to tell us. So what will be the amount that it will be transferred? 28,125. How much will be the amount of share forfeiture to be credited? It will be 28,125 rupees. Clear? You all have any doubt in this question? It was a little bit different, but it is, they are telling you to do something specific. We will do that specific. Okay, otherwise share forfeiture account was coming as 15,750, but they are telling me that use this securities premium, remove this, try to get this securities premium for that excess amount which was being paid. All right, I'll move to the next question. Okay, now next question is very easy. What we have done, it is similar to that. P Limited has forfeited 5,000 equity shares of rupees 10 each for non-payment of the first and final call of 2.5, which were then reissued at a premium of rupees 3 per share receivable at allotment. Out of these, 3,200 shares were reissued at rupees 8 per share as fully paid up. Okay. The amount transferred to the capital reserve will be, means they are telling you the last journal entry. After finishing using the share forfeiture, whatever is left in share forfeiture, we transfer that to the capital reserve account, right? That amount they are asking. Okay. Now first thing, see, 5,000 shares are forfeited, but only 3,200 shares were reissued. Okay, so that means not all the shares which were forfeited have been reissued. Okay, they were reissued at rupees 8 per share. Now if I tell you to give me the journal entry of share forfeiture, it will be what? Equity share capital account. Okay, is there any securities premium unpaid or something? No, it will not be unpaid because rupees 3 of premium was receivable on allotment. Okay, calls in arrears, forfeiture is happening due to the non-payment of first call and final call. Okay, so equity share capital of this 5,000 shares of rupees 10 each. So 50,000 here. 2 calls in arrears and 2 share forfeiture. How much will be the calls in arrears? 5,000 into 2.5. 12,500. And how much will be the share forfeiture on the face value? Na? Share forfeiture will always be on the face value. Okay. These shares were issued at a premium of rupees 3 per share receivable on allotment. Face value is how much? See, they have given me face value as 10. Okay. Final call they have told me is 2.5. Nothing else they have given me. That means 7.5 must be in allotment and application together. Okay, so this will be 7.5. So 37,500 is there in my share forfeiture account. Now these shares have been reissued. Now from that 5,000, 3,200 shares have been reissued. So if I want to pass my reissue entry, what can I do is bank account debit. Okay, 3,200 shares were reissued at rupees 8. Okay, so how much it will be? 25,600. Right? There is a loss on reissue. Loss on reissue is by 2 rupees. Okay, so this is going to be 6,400. 2 equity share capital, it will be 32,000. Why? 3,200 into 10. Okay, they are asking me how much should be transferred to capital reserve. Now you all will say, ma'am, in share forfeiture there is 37,500 here, no? 37,500 is there in share forfeiture. I told you, write off the loss with the share forfeiture. How much is the loss? 6,400. Okay, so 37,500 minus 6,400, 31,100 is remaining. We will transfer that to capital reserve. Wrong. The number of shares which I have forfeited are not the same as the number of shares I reissued. How can I close my share forfeiture? I still have 1,800 shares are still remaining. From 5,000 I reissued only 3,200. So I cannot close my forfeiture account completely because those shares are still there. But yes, share forfeiture to the extent of reissued shares I can close. Okay, so this means what? That when you forfeited 5,000 shares, how much was there in your share forfeiture? 37,500. What if you would forfeit only 3,200? How much it would have come in your bank? 24,000. From that you used 6,400 as a loss on reissue. You are left with 17,600. This you can transfer it to capital reserve. Okay, once again I am repeating. The amount of shares which you have forfeited are not the same as the amount of shares you reissued. There are some shares which are still lying with the company. Tomorrow they can reissue that. Okay, so you cannot take the whole share forfeiture and write off the loss and close it. No. You can take the share forfeiture only till the extent of the reissue. So when I had forfeited 5,000, I could generate 37,500 in my share forfeiture account. What if I would have forfeited only 3,200 shares? It would have given me 24,000 in my share forfeiture. From that, I can write off the loss of 6,400. Balance will be 17,600. Okay. Problem number 2 understood. Anything you all have to ask? Okay. I am moving to question number 3. C Limited invited applications for the issue of 20 lakh equity shares of rupees 10 each. It is payable as 3 on application and 7 on allotment. Only 2 stages are there. Applications were received for 35 lakh equity shares. Applications for 7 lakh shares were rejected. On pro rata allotment was made to the remaining applicants. Excess application money was then adjusted for the sums which are due on allotment. Ravi could not pay the allotment money on his 2,500 shares allotted. Amount which will be received on allotment will be how much? Okay, let us solve this problem properly. Come. Okay. Question number 3. Okay, number of shares, I'm writing the given so that we have the question again in front of us. Number of shares to be allotted is 20 lakhs. Number of shares applied is 35 lakh shares. From this 35 lakh shares, 7 lakh shares were refunded, rejected. So we are left with 28 lakh shares. We did the pro rata. Now if I am doing pro rata, that means I am doing, if you have applied for 28, you will get 20 shares. Right? Okay. 20 is to 2. 28 is to 20. So now face value of the share is rupees 10. It is not issued at premium. They are saying on application stage they have collected 3 rupees, and then on the allotment stage they are collecting 7 rupees. Clear here? Okay. Now there is a calls in arrears of Ravi. Okay. Calls in arrears of Ravi. On how many shares he was allotted? He was allotted 2,500 shares. Okay, and he did not pay me what? My allotment money. Allotment money is, calls in arrears is on allotment money. We have to find actual amount received in case of allotment. Okay, now my ratio of applied to allotment, I just found out, no, 28 is to 20. Since Ravi was allotted 2,500 shares, how much he must have applied for? 3,500. That means in the case of application, he has paid me additional 1,000, on 1,000 shares he has paid me, no, that 3 rupees. Therefore, calls in arrears calls in arrears of Ravi on allotment 2,500 shares at rupees 7. Okay, he did allotment stage 17,500 is actually his calls in arrears, but there was an excess amount which I received in application minus excess on application. How much is the excess on application? On 1,000 shares, 3 rupees was the application money, so 3,000. So his actual calls in arrears is 14,500 actual. Okay, so amount to be received in allotment, amount to be received in case of allotment will be equal to allotment money due. Okay, allotment money due will be on 20 lakh shares. Okay, so on 20 lakh shares, 7 rupees, 140 lakhs. Okay, I will have to subtract excess money. Okay, I have to subtract advance money of application. Right? How much is the advance money on application stage? How much am I adjusting? On 8 lakh shares, no? I am adjusting on 8 lakh shares, 3 rupees. 24 lakhs. And minus calls in arrears. How much is actual calls in arrears? 14,500. Okay, so on the calci do 140 lakhs. Okay, 140 lakhs means after 140 press 5 zeros. Minus 24 lakhs minus 14,500. Your answer will come to 115 lakhs 85,500. Okay, 115 lakhs 85,500 is your answer. Same thing like how we did for that herbal tea. Same thing we have done here. Okay. Next question. Z Limited issued 5,000 equity shares of rupees 10 each, 10% premium, which is payable on allotment. The company received application money 3 and allotment money was received only on 4,500 shares at rupees 4 per share. Okay, the company then forfeited 500 shares for non-payment of the allotment money. At the time of forfeiture, equity share capital account will be, at the time of forfeiture, I will be debiting my equity share capital, no? So how many shares am I forfeiting? I am forfeiting 500 shares. Okay. Application, allotment, okay, and then 10 rupees it is. On application I am getting 3. Allotment money is 4 per share. That means it is inclusive of your premium, no? So how much will be your premium on 10 rupees? On 10 rupees it is 10%. 1 rupee is your premium. That means on allotment also you are getting 3 plus 1. Immediately after allotment the shares have been forfeited. So how much money is being called for? Okay. Application money received was rupees 3 per share and allotment money was received only on 4,500 shares at rupees 4 per share. Okay, so this rupees 4 per share, it is the face value of the share plus 1 rupee will be the premium. Okay, so total money, the first final call nothing is given. So the total money is 7 rupees on the face value. So when I will cancel the shares, I will cancel it at 7 rupees, no, equity share capital account debit. 500 shares at 7 rupees, 3,500 will be the amount. Okay, they have not written this inclusive of premium. Okay, amount of money received on 4,500 at rupees 4 per share is given to me. Okay, so I will take 4 rupees over here. Clear? So you will have that journal entry, equity share capital account debit, securities premium account debit, 2 calls in arrears, 2 share for feature account. If you want, you can pass that journal entry also. Next question I am going to. Okay. The company has subscribed capital of 2 lakh equity shares of rupees 25 each. Rupees 20 per share is only called up. The directors have forfeited 200 equity shares which was held by a shareholder who failed to pay the first call made at rupees 10 per share. Later, the directors reissued these shares at rupees 20 per share, paid up at rupees 15 per share. On reissue, the amount to be transferred to the capital reserve account will be how much? Okay, now basically 200 shares were being forfeited, na? And then they were reissued. Now for forfeiture, application 25 rupees share each, rupees 20 is only called up. Okay, so there is an application stage, then there will be application and allotment. Okay, and then there is a first call. Okay, now first call is of 10 rupees. who failed to pay the first call amount. Okay, now here 25 rupees is the share price, but they have done only 20 called up. Okay, until the first call made, only that much is called up. They have not done the final call of rupees whatever is the balance, correct? So basically I can say that since here reissued these shares at rupees 20 per share. Okay, now this 20 rupees is basically the amount which is being called up. Okay, so basically I can say 10 rupees would be the amount which was there on application plus allotment. Together I have written, I don't know the bifurcation, I have just written it together. Okay, so when I want to do my forfeiture entry, it will be what? Equity share capital account debit. Okay, there is no securities premium, 2 calls in arrears and 2 share forfeiture account. So equity share capital will be on the called up amount, not on 25 rupees. They have called up only 20. So 200 shares into 20, 4,000. Okay, calls in arrears will be 200. How much is the unpaid amount? 10 rupees. So 2,000. And then the share forfeiture unpaid amount, again this is 2,000. Now these shares were reissued as 20 rupees share, but they were reissued as rupees 15. Okay, so that means I have reissued at discount. So when I reissue, I got bank account debit. Okay, I reissued my 200 shares for rupees 15. So 3,000. But my equity share capital is of 4,000. That means discount on reissue, share forfeiture account, I have used till the extent of 1,000. Therefore, how much is the balance left? 1,000 is left. That 1,000 is left in the share forfeiture account, that I will transfer it to capital reserve. See, share forfeiture generated was 2,000. I used 1,000 for loss on reissue. Loss on reissue was 1,000. Therefore, balance left was to be transferred to capital reserve 1K, 1,000. Answer is 1,000. Clear? Come on, next question. Question number 6. ABC Limited issued 1 lakh equity shares of rupees 100 each. They are payable as under application 30, allotment 30, final call 40. There is no premium or anything. 1,45,000 applications were received as under. Applications who applied for 25,000 shares, they were allotted full. And applicants applied for 1 lakh shares were allotted 75,000 shares on pro rata basis. Remaining applications were then rejected. Okay, so from 1,45,000 I then also accepted 1,25,000 and then balance I kind of rejected. Amount received at the time of application will be how much? Very easy. How much applications I have received? 1,45,000. How much money is to be received on application stage? 30 rupees. So this will come as 43,50,000. Okay. Same question. All the given is same. They are saying how much excess money is received on application. See, I had 1 lakh excess money on application. Okay. Excess money will be total amount received minus amount of shares to be allotted. Total amount received was on 1,45,000 shares, 30 rupees, minus amount of shares that were to be allotted. I can allot only 1 lakh shares, okay, into 30 rupees. So this will be how much? 43 lakh 50,000 minus 30 lakhs. So how much is the excess money? 13 lakh 50,000 I have received in additional. How much am I going to refund? Refund will happen of the rejected applicants. Okay, from 1,45,000 I have kind of adjusted 1,25,000, giving them pro rata. Okay, so basically I am refunding to 20,000. I am giving them the 30 rupees back of application. So 6 lakhs rupees. I am trying to adjust with 1,25,000. They have told no that they are adjusting on pro rata basis. Okay. Same given. Amount of excess application money available for adjustment against the allotment money will be how much? So how will I do the adjustment? Amount received on pro rata, okay, minus amount of share capital to be allotted. That will be the adjusted amount, no? Now amount received on pro rata, one, I am accepting those 1 lakh shareholders, okay, then minus I am also 75,000 into 30 amount of share capital to be allotted. That will be equal to 25,000 into 30. So that will come to 7,50,000. That I will be adjusting on the pro rata basis. I am adjusting 1 lakh shares, okay, and I am adjusting 75,000 shares. Here it is given, no? There are two ways they are adjusting. Then there is not only one pro rata. Here, applicants who had applied for 25,000 shares, they were allotted full. And the ones who had applied for 1 lakh shares, they were allotted 75,000 shares on pro rata basis. Okay, fine. So now next question. Question number 10. LMN Limited allotted 20,000 shares to the applicants of 28,000 shares on pro rata. Amount payable on application is 25 per share. Kanika applied for 700 shares. The number of shares which can be allotted to Kanika will be how much? So 28,000 shares, if you have applied, you can be allotted only 20,000 shares. So Kanika has applied for 700 shares, so she can be allotted how much? 500. Cross multiply. This is the answer. Okay. Then question number 11. A Limited forfeited 1,000 shares of rupees 10 each for non-payment of first and final call of rupees 3 per share. 600 from these shares were reissued at rupees 9 fully paid up. What is the amount to be transferred to the capital reserve account? Okay, so paid amount is rupees 7, unpaid is rupees 3. Okay, forfeiture has happened of 600 shares. I am doing forfeiture has happened for 1,000 shares, but I am doing as per 600, so that I do not have to remove that pro rata again. Okay, I am showing you this also. So how much it will generate in share forfeiture account as per 600? Paid, no? On 600, paid amount, right? 4,200. That will only come, like what you will do, no, from that pro rata, how I showed you, this answer will only come. I am doing directly forfeiture with the help of 600 since it's a MCQ question. Okay, so how much I would have generated in my share forfeiture account? Paid amount on the number of shares which are forfeited, 600 into 7. Then I did a reissue. Reissue is at rupees 9. That means there is a loss of 1 rupee, no? So loss on reissue will be on 600 shares, 1 rupee. So I will subtract 600 from here. So 3600 is the answer. Okay. Now last question. ABC Limited issued 10,000 equity shares of rupees 100 each at par. They are payable as under 30 on application, 20 on allotment. First final call 500. Applications were received for 30,000 shares. Applications for 5,000 shares were rejected, and then pro rata allotment was made for that 25,000 shares. Excess application money is adjusted towards the amount due on allotment and calls. How much money will be received in cash on first call? Okay, so let us solve this. I'm just writing this application, allotment, and then first and final call. On application it was 30, allotment it is 20, and then it is 50. This makes face value 100. Okay, applications amount received will be on 30,000, 30 rupees. That is how much? 9 lakhs. And I have rejected 5,000. We have rejected 5,000 applicants. So we have to refund them this 30 rupees. So 1,50,000 I will refund. So 7,50,000 is the amount to be received. There will be pro rata allotment of 25,000 shares. Pro rata. This I have to do the adjustment, right? Correct. Now amount due on application. Actual amount, though I have received that much, that is a different thing. But how much is the amount actually due on application? It will be based on the 30,000 shares, no? So 30,000 into, 10,000 shares. 30,000 is the applications received, but I can allot only 10,000 into 30 rupees, which is 3 lakhs. Okay. Therefore, excess amount received will be 7,50,000, which I got up here. Okay, adjustment. Okay, 7 lakh, 5 lakh, 1,50,000. So I refunded only. Okay, so excess amount 7,50,000 minus 3 lakhs. That will be how much? 4,50,000 excess amount received. Now this excess amount received I will have to adjust on my allotment stage and on my first call stage. So amount to be adjusted on allotment. Okay, amount adjusted on allotment. On allotment I am getting 20 rupees. Okay, so from that 4,50,000 on 10,000 shares, 20 rupees. So it's going to be 2 lakhs. So from this 4,50,000, 2 lakhs I will adjust on allotment. How much I will be left with? 2,50,000 will be the balance. Okay, means basically it is the excess received. Okay, then first call, first and final call. How much are the shares? 10,000 shares. On that I am supposed to receive on 50 rupees. 5 lakhs I am supposed to receive. It is due. But I will adjust, this balance. They have told me to adjust in both the stages. Obviously, Why? Because allotment stage, so I will not be able to adjust also. It is only 2 lakhs and excess amount received is 4 lakh 50. Okay, so balance I am adjusting over here 2 lakh 50. So actual amount of cash I will receive in my first call will be 2 lakh 50 cash received. 2 lakh 50,000 on first call. Okay, once again I am explaining you all. They are saying that they have only 10,000 shares to allot, but they got applications of 30,000, 20,000 extra they have got. Okay, so from that what they did, from that 30,000, 5,000 they refunded only. So from 9 lakhs, 1 lakh 50,000 already went away. And the adjustment they did for pro rata basis for 25,000 shares. Okay, so basically that additional of 7 lakh 50,000 I have to adjust. How will I adjust that 7 lakh 50,000? First amount due on application 3 lakhs, that I will remove from 7 lakh 50. Correct, that is the actual amount, 10,000 into 30. So I am left with excess amount of 4 lakh 50 to be adjusted on allotment and on the first call. Allotment, how much money is due? 10,000 into 20 rupees is on allotment. I will adjust that. Now I will be left with 2 lakh 50. That I will adjust with the final call. On final call I am supposed to receive 5 lakhs, but I have already received this 2 lakh 50. Okay, so 2 lakh 50 will be the cash received on first call. Okay, this is the answer. Clear? So with this I have finished with your issue of shares. Okay, now before I take a break, I would just like to tell you that I will be coming back and we will be doing the other part, which is buyback and right and bonus shares. Now they are also part of issue of shares and they are little important. Okay, they ask you this too, bonus and right shares along with buyback is for good other 5 to 7 marks. Okay, so we are going to come back and we will quickly, I will take you through. I already have the solved written notes, so I'll be quickly taking you through the concepts and the basic questions. Okay, so we will meet after a break. Okay, so now it is 1:30, so we get back. We were going to meet at 2 p.m. Okay, break time. We'll resume at 2 p.m. Okay, everybody. So just take a quick break and then come back. Hi everyone, let us begin now. You all are back. You all can hear me? Is the screen visible? And am I audible? Hello? Okay. Yeah. You all need more 2 minutes or should we start? Okay. Can you all hear me? Can you all see the screen? Okay. Now I'm starting with issue of right shares and bonus shares. Okay. It is again a part of your share capital only. Now basically issue of right shares. Okay. Right shares. They are not given for free. Issue of right shares mean what? That I am asking my existing shareholders who are already with my company. Okay. I am sending them a special invitation to apply for the additional money which I need. So existing shareholders are only given the chance to apply for new shares. Okay, for new shares. That is known as right shares, issue of right shares. Okay, we can exercise the right if you want to as a shareholder. If you do not want to exercise, it is okay. They send you a special invitation. Okay, that these are the shares which the company need, and we are likely, if you are having 2 shares with the organization, we are giving you a right issue of 1 share against every 2 shares, whatever is the ratio. Okay, so right shares are in the form of given to the existing shareholders. Same thing is with the bonus shares. Bonus shares are also given to the existing shareholders only who are appearing on the register of the members. Okay. So existing shareholders are given shares without any consideration. Okay. Free. Without any consideration. It is known as bonus shares. Okay. So there are certain reserves of an organization which are used to convert the bonus to convert that. It is like basically capitalization of reserve. Okay, if I tell you, it is known as capitalization of reserves. Means what? That the company has got enough reserves and those reserves belong to the equity shareholders. So those reserves, they try to convert it into capital by showing it as equity share capital. Okay, basically when we talk about reserves, all the amount is standing in the bank account. Okay, they are just allocated in the form of reserves. Correct. Now from where do we use these reserves? We have all divisible. We use it in the form of CSCOD. Okay, we first try to use all the CRR which is available with us, capital redemption reserve. Then we use securities premium also for giving bonus. Any other capital reserve which is pending with us. Other non-divisible profits. But non-divisible means what? Not totally available. They are statutory reserves. Like say sinking fund or say some foreign reserve. Okay, they are non-divisible in nature. They are not freely available only for equity shareholders. There is a statutory reason why you have made that reserve. But those the other non-divisible profit, to the extent they have told you to utilize. In case they have not told us to utilize, we will never use this. And then D is the other divisible profits, which we all have: general reserve, P&L account, etc. Okay, we can never use revaluation reserve. Revaluation reserve can never be used for bonus shares. Okay. Now, what do you mean by capital redemption reserve? Now, I'll give you a little bit of understanding of CRR. With that, you will also understand buyback, which is our next topic after right shares. Okay. Now, see, I will give you one situation. We all know what is the meaning of buyback, right? What do you mean by buyback? Anyone? If in case you all are sleeping, wake up. What do you understand by buyback of shares? If I am saying that the company is buying back shares, so what do you understand by buyback of shares? No answer, you all do not know, no problem. Chalo, buyback means what? Basically, it is the company is buying back the shares for, because they don't need this much of amount of capital. Basically, they want to reduce their share capital. Okay, so they buy back the own shares. Now, a company itself cannot be a shareholder in its own organization. So whenever we do buyback, basically we cancel those shares. So say I had equity share capital of 1000. Okay, and then I had, because of this share capital in the bank account, also I got 1000. Right? Now say suppose I have some general reserves of rupees 2000 available with me. Okay. Now when I'm doing a buyback, I can either do it by issuing more fresh shares and then buying back. I need funds, no? I need certain amount of funds. So say suppose I'm using general reserve to do the buyback, okay, of 500 shares. So equity share capital will reduce by 500 and I'm using my reserves for the purpose of buyback. Even general reserve will reduce by 500. And when I will pay back my equity shareholders, I will be, from my bank account, 500 will go. Okay, this is how the accounting treatment works. Okay, when I am doing buyback of equity shares with the help of the reserves I have, in my balance sheet, there will be two reductions. Equity share will capital will also reduce, general reserve will also reduce. And on my debit side, bank account will reduce. So if you see, there are two down arrows here and there is only one down arrow. That means the balance sheet will never tally. In order to tally the balance sheet, we make one account which is just it's like a bogus account, capital redemption reserve account, to the extent of the money used from the reserves. It is nothing but it is just to show that 500 is used from the general reserve in order to do the buyback. Only then my balance sheet is going to tally. Okay, only then my balance sheet will tally. I mean, this right now it is not going to tally because I have just made one summarized balance sheet. I do not know the other details. But when I talk about different type of reserves, those reserves are nothing but, say now this reserves, okay, this 1500 reserve, there is equity share capital also. So it is say 2500. No, it was first 3000, no? 3000 rupees. I am making a full balance sheet for you. Okay, now I reduced this by 500. So this has become 2500. Correct? So now this 500 has got reduced. Over here the reduction is happening of 1000. Equity share capital will get cancelled and I did it from the help of my reserve. So here also 500 will get cancelled. So this will become 500. This is going to become 1500. So how will my balance sheet tally? Nominal amount of the value of the share capital which you are buying back, that you will show it with the help of CRR, capital redemption reserve. Okay, so now here it will tally. It will become 2500. So there is no money as such in the capital redemption reserve account. It is just to show. So whenever I will see CRR in a balance sheet, I will come to know as an investor that they have done a buyback. Okay. So CRR represents the buyback done with the help of the reserves already, which are the part of the profits or part of the shareholders' money. Okay. So I create a bogus account, a khoka account, which is known as, there is nothing actually there, non-cash. So I just create that, and then in order to get rid of CRR, then they start issuing bonus shares after doing the buyback. Okay, so it is capitalization of reserves, buyback. Bonus of shares is capitalization of reserve. So whenever there is a buyback which has taken place, after some time, that company will try to get rid of that CRR. They will convert that CRR by giving bonus shares to the shareholders, because there is no money the company has to pay. They have to just show it that, okay, instead of 10 shares, this shareholder now has 12 shares. That's it, converting your reserves into capital. Okay, so this is going to be our entire revision about right shares, bonus shares, and buyback of the shares. Okay, we will just read one question for right issue and we'll solve this. And the journal entries are very simple. I will show you when we are going to solve the sums. There are 2 to 3 journal entries in case of right shares, similarly in case of bonus shares. Okay, clear until now? Any question, any doubt you all are having? With the help of a problem, let us solve one question. You will be able to understand it better. See, balance sheet of AC Limited on 31st of December 2019. Shareholders funds, there is 40,000 equity shares of rupees 10 each. They have securities premium account, general reserve, profit and loss. In non-current liabilities, there is nothing. In current liabilities, they have creditors of 90,000. In assets, they have non-current assets, there's plant, building. In current assets, they have stock and cash and bank balance. The company issued 3 bonus shares from every 4 fully paid up shares. Security premium has to be utilized first. Show the journal entries. Whatever they have given to me, that I will follow first. Okay, so now answer number 1. Okay, we are going to do it in the books of AC Limited. We have to pass journal entry for the bonus shares. Now first, working note for the number of shares issued as bonus. They are saying bonus is to be given, bonus of how many shares? 3 bonus shares for every 4 fully paid up shares. Yes, bonus can be only given to the shares which are fully paid up. Unless and until the shares are, if they are not fully paid up, either you make them fully paid up by giving a partly paid up bonus or call the money. In case your fully paid up shares are, your shares are not yet fully paid up, 10 rupees is the value, you have called up only till 8, call up that 2 rupees first and then only you can do the bonus issue. Bonus can happen only on fully paid up shares. Okay, very important. Now bonus of 3 shares for every 4 shares held. Okay, so bonus is to held 4:3. Total shares are 40,000. So how much bonus will we are giving? 30,000 shares. Okay, now face value of the bonus for the shares is rupees 10. So equity share capital will be 3 lakhs. They are telling me that use security premium account first. So my journal entry will be only 2 journal entries in case of bonus. Securities premium account. How much money do I have in securities premium account? 1,40,000. See here. In securities premium account, I have got 1,20,000. No, sorry, 1,40,000. Okay. General reserve and P&L balance I have got I can use whichever reserve I want first. Either you can go for P&L first and then the general reserve for the balance amount. Okay, we need total 3 lakhs now. So from 3 lakhs, 1 lakh 40 is already done. Then I have used general reserve. So that also account will now get closed. 70,000. Okay, and then the balance I have taken from profit and loss account, debit 90,000. Okay, to bonus to equity shareholders. To bonus to equity shareholders. Okay, so that will be 3 lakhs. Now this I will transfer it to the equity share capital account. So bonus to equity shareholders account debit 3 lakhs to equity share capital account 3 lakhs. Okay, you will have to show these two journal entries. Okay, here you can write as a narration being 30,000 shares issued as bonus. Okay, and then here being bonus account transferred to equity share capital account. Clear? Easy, no? The sum is, it is just a big question, but it was very simple. Now the next question. Question number 2. The balance sheet of A Limited as on 31st of March 2014 is as follows. Authorized share capital is 1,50,000 shares of 10 each, and issued, subscribed and paid up rupees 7.5 each, called up and paid up. So 10 rupees is the value and they have only called up and paid up 7.5. So 2.5 is yet remaining. Reserves, we have CRR, plant revaluation reserve we cannot use. Securities premium, yes, you can use. Development rebate reserve, if they have mentioned something, we will use it. Okay. Then we have investment allowance reserve, and then we have general reserve. Now they are saying the company wants to issue bonus shares to its shareholders at 1 share for every 2 shares held. Necessary resolutions were passed. Requisite legal requirements were complied to. You are required to give the journal entries. Now I told you bonus cannot be issued unless the shares are fully paid up. So first we will make the shares fully paid up. Okay, so we will use the free reserves. We will use the security premium account. We will use the CRR account. Revaluation reserve cannot be used. Okay, now how much is the bonus? Bonus issue. Bonus is to held. If there are 2 shares held, I am giving 1 bonus. How many total shares are there? Amount is 6 lakhs rupees, no, here. So 6 lakhs divided by 7.5, which is called up and paid up. So you will come to know the number of shares. 8 lakhs. No, there is how many? 80,000 shares is held. So bonus will be how much? 40,000 shares. I came to know the number of shares issued is 80. How did I come to know? 6 lakhs is the amount. Divide by the paid up amount 7.5. Okay, now first I will have to make my shares fully paid up. Okay, so first entry will be bank account debit. Okay, how many shares are there? 80,000 shares into 2.5. First I will make them fully paid up. 2 lakhs. Okay, 2 lakhs. To equity share capital account directly. Okay, I have made my shares fully paid up. You can write in the narration being final call made. of rupees 2.5 made. Okay. Now question number 2. I have directly passed this entry. If you want, you can entry number 2, if you want, you can do is bank account debit to equity share final call account debit to equity share capital, and then the bank account debit to equity share final call account. Both is correct. Okay, you can pass it like transfer and then the receipt entry. I have directly done this. Okay, now the next entry for the bonus. For bonus, I will first use CRR. CRR account debit. Now CRR is available to how much? CRR is 1,50,000. Okay, so I will use 1,50,000 of CRR. Then I will use securities premium 1,50,000, and then from general reserve I can use it, because for the other reserves they are not really free. Investment allowance, development, they are having some purpose behind it, right? So I will not use them. Simply I will just use these reserves. CRR account debit, securities premium account debit, general reserve account debit. So 1,50,000, 1,50,000. And how much do I need for the bonus? 40,000 shares are of rupees 10 each. So I will need an amount of rupees 4 lakhs. Right? So this is going to be 1 lakh from general reserve. To bonus to equity shareholders. Okay, 4 lakhs. And then the third journal entry, it will be bonus to equity shareholders to equity share capital account, 4 lakhs. Clear? Simple, na? Okay, if you all want, you all can take a screenshot of this. This journal entry, the first one I have written directly. You can write it as how we used to do the transfer and receipt, share final call. Okay, to equity share capital, and then from there you can say bank to share final call. Same. Clear? Okay, just give me 2 seconds. All right, come on, now let's move to another question number 3. Okay, the balance sheet of Z Limited as on 31st of March 2010 was as follows. You have issued and paid up capital of 20,000 shares of 10 each, profit and loss account, 10% debentures and sundry creditors, freehold property, stock, debtors and cash at bank. To pay a dividend of 10% and corporate dividend tax at the rate of 12.5%, surcharge of 10% and education cess is 2%. Issue 1 bonus share for every 4 shares held, to give existing shareholders the option to buy 1 share of rupees 10 at rupees 14 for every 4 shares held prior to the bonus, thereafter redeeming the debentures at a premium of 5%. Okay, so redeeming debentures at a premium of 5%, we will keep that last. First thing we have to do is, we will first do the right shares. They are telling us that this is prior to the bonus. So first we will do the right issue and then we will come to the bonus issue. Okay, so how many shares am I giving them? Right to buy 1 share for every 4 shares held. Okay, so let us solve this. Okay, in the books of Z Limited. Now I have to calculate working note, right issue. Okay, number of right shares currently. Okay, right issue to held. Currently they are having 20,000 and they are saying if you are having two shares we are going to give you one right share. So therefore 20,000, no, for every 4 shares held, one right share for every 4 shares held. Okay, so 20,000 divided by 4, it will be 5,000 shares. Okay, now working note 1 is done. Working note 2 we can do for the bonus shares. Now how many bonus shares I will have? 20 plus 5 actual number. Now total number of shares. Total number of shares will be 20,000 plus 5,000. So it will be 25,000. Correct? Now I am going to give them the bonus shares. They are saying number of bonus shares, it will be held is to bonus. You will get one bonus for every 4 shares held. So there are 25,000 shares. Bonus will be 25,000 divided by 4. 6250. Face value of the share is rupees. How much is the face value? Rupees 10. Okay. So right shares they are giving it at rupees 14 here. The face value is 10 but the issue price is 14. And here this is going to be face value 10 for bonus. Okay. Now first thing I am going to give them the dividend. Okay, first they are saying that give them a dividend. So dividend I will give first to this 20,000 shareholders. Okay, so 20,000 into 10 on 2 lakh rupees. Dividend is always given at face value. Okay, dividend we are doing. Now calculation of dividend amount. Okay, dividend is at the rate of 10%, which is going to be 2 lakhs. I told you it is always on the face value. This is going to be 20,000. Okay. Now basic rate here. Okay, I am going to pay a dividend of rupees 20,000. Now on that we have a tax rate of 12.5%. DDT is paid on the dividend amount. Okay, and surcharges of 10%, and then we have 2% of education cess. So if asked to calculate this, what will I do is basic rate. This is all working note. Okay, basic rate. Working note number 3. Dividend amount I know. This is my dividend amount. Basic corporate dividend tax rate, okay, is 12.5. Add surcharge. You will take 10% of 12.5. Okay, so it will be 1.250. Okay, you will get 13.750. Plus you will take education cess. Okay, education cess is 2% of 13.750. So that you will get as 0.275. So effective rate is going to be 14.025% of this DDT, corporate dividend distribution tax. Okay, so now when I will pass my journal entry, so my journal entry will be I have to pay the dividend. Okay, so profit and loss account debit, it is an expense. To dividend account. Okay, to corporate dividend distribution tax, right? Dividend is 20,000. On that my tax rate is 14.025%. So on 20,000 into 14.025, I'll get 2805. So P&L, the total expense will be 22,805. Then I have to make the payment. Dividend account debit 20,000. Corporate dividend distribution tax account debit 2805. To bank, dividend and corporate dividend distribution tax paid. Okay. Then I did a right issue. They told me to do the right issue first and then do the bonus and last redeem the debentures. Okay, so bank account debit, I will get money. How many bonus shares am I giving? 5,000. I am going to get 14 rupees each. So 70,000. To equity share capital account, on 5,000, 10 rupees, which is 50,000. To securities premium account, which is going to be 20,000. 5,000 into 4. After my right issue is over, I did the bonus. Okay. So for bonus, how much money I will need? 62. How much is the bonus? We calculated, right? 6250 into 10. 62,500. Okay. So I have got my securities premium with the fresh issue 22,000. If I want, I can use that, or I can also use what is given in my balance sheet. In my balance sheet, I have got profit and loss 1,80,000. No, so I am using profit and loss. You will not be given wrong. Okay, whatever you are using, write it in the narration properly. Just do not use revaluation reserve and other non-divisible profits. If they have not mentioned, do not use it. If they have mentioned that we have a non-divisible profit like investment allowance reserve, but 50% is divisible, so kindly use it, then you can use it. Okay. So now question number, entry number 4, I am using profit and loss account debit 62,500. Okay, 6250 shares into 10 rupees to bonus to equity shareholders 62,500. Next, bonus to equity shareholders account debit to equity share capital account. Okay, 62,500. Now the last thing they are telling me is to redeem the debentures. Okay, so debentures are to be redeemed at a premium of 5%. Means this 6%, there is what? 10% debentures, 1,20,000. Okay, I have to give them a premium also when I am redeeming. Means what? I am giving it back. Okay, company is taking the debentures back. They are paying off the amount. Okay, so company is redeeming means company will have to pay. Redeeming of debentures, like how we are doing buyback. Okay, in buyback, company takes their shares and gives the money back to the shareholders. Same thing for debentures. Redemption means taking the debentures back and giving them the money. Okay, so here debentures amount is how much? 1,20,000. I will have to give them 5% premium. Okay, so 6,000 rupees I have to give premium. So I will say 10% debentures account debit 1,20,000. Premium on redemption account debit 6,000 to bank 1,26,000. Okay, and then this premium on redemption, I can write it off with the help of my securities premium account, or you can write it off with the help of the P&L account also. Okay, so you can write it off P&L account debit, or you can also use securities premium account. Okay, whatever you are using, you are supposed to give a proper narration. Okay, clear? So this was one question in case of bonus and right and everything, and then was one small debenture related thing also. Okay, now the next question. A company has decided to increase its existing share capital by making the right issue to the existing shareholders in proportion of 1 new share for every 2 shares held. You are required to calculate the value of the right if the market value of the shares at the time of announcement of right issue is 240. The company has decided to give 1 share of rupees 100 each at a premium of 120. Now I will explain this question. What are they trying to say? See, you are a company, say, okay, company A, and you have approached me. You are telling me that, ma'am, you are my existing shareholders and we are offering you to buy our shares again, okay, which is a right to share. So you can buy it at rupees 120. We are giving you the offer. I'll say okay. I will think. As an investor, what I will do is I will go and see the market price. If in the market this company's share is available in 80 rupees, why will I take your right issue? I will go and buy it from the market. I'll invest money. I'll get so many more shares with that amount of investment which has to be made. There has to be some benefit, no, in the right. Only then an investor will come to you. Only then your existing shareholders would want to invest. Correct? So here if there is held to, you are getting 1 right shares. Okay, right? No? 1 new share for every 2 shares held. Okay. The market price currently of my 2 shares into 240, if I will do 480, and company is giving me this 1 share, I'll have to buy at 120. So 120 plus 480 is 600 rupees. Divide by 3 shares. Now I'll have 3 shares, no? If I'm taking, I have 2. And if I'm taking this 1 share, I'll have 3 shares. So my average price per share has now become 200 rupees. Therefore, value of right share will be market price minus this average. So market price is 240 minus average is 200. Basically, I am getting a value of 40 rupees on my share. If I exercise this. If I exercise my right, I am getting a value of 40 rupees. Okay, only then as an investor, I am going to invest. Obviously, the market price is much higher than what am I getting in my right issue. But how much is a value addition? Today, if I am having 3 shares of that company, how much is value addition done to me? I need to know the average market price, no? So, average price for my those 3 shares is 200 and market price of 1 share is 240. So, the value addition is 40 rupees. Okay, similarly, we have this question number 5. Fitness Limited is planning to raise funds by making a right issue of equity shares to part finance its expansion. Existing equity share capital of the company is rupees 40 lakhs and the market value of the share is 45 rupees per share. Company offered to its shareholders the right to buy 2 shares at 12 rupees. Face value is 10 for every 5 shares held. Okay. So right issue is to held. For every 5 shares, they are giving you 2 right shares. Correct. Now, the held shares market price is 45. So, 45 into 5, 225. Right shares I will get at 12 rupees. Issue price is 12. I will always take the issue price. Okay. So, I am going to get 2 shares at rupees 24. So, how much will this be? 24 plus 225 will be 249. Divide by 7. Now, the number of shares, total number of shares will be 7. So, my each price, okay, average price of my shares will be 249 divided by 7, 35.57. Theoretical market price per share will be 35.5 cents. This is known as theoretical market price, average price. Theoretical, not actual, as per the theory which we are doing. Value of the right will now be 45. Second question. Okay, it will be 45 minus 35.57. 9.43 rupees. And percentage increase in the share capital. Simple. How many new shares I will have? 2 over what I was having? 5. How much will be the increase if I take this right issue? 40% of my share capital will increase. Of the company's also share capital will increase. Clear? Okay. Come on. Any questions you all have so far? You have anything to ask? You all can please go ahead and ask. Any doubt you all are having? Okay, come on. I'm doing some past exam questions. BCC Limited we have equity shares 8 lakhs, securities premium, general reserve, P&L, sundry creditors. Company issued 3 bonus shares. Okay. For every 4 shares fully paid up. Okay. Securities premium account will be utilized first and then the general reserve to issue the bonus shares. Profit and loss account will be how much? So for every 4 shares, okay, they are giving 3 bonus. How many shares we have? 8,000? No, 80,000 shares. 10 rupees, no? So how much will be the bonus shares? 80,000 cross multiply. Okay, 60,000 shares. Face value is 10. So I will need rupees 6 lakhs. They are telling me that first we have to utilize securities premium and then we have to utilize general reserve. Okay, so from 6 lakhs minus 2 lakh 80 minus 1 lakh 40. So 1 lakh 80 I will have to use it from P&L. Right? No. Balance 1 lakh 80 from P&L. This is the answer. So simple. A company has decided to increase its existing share capital by making right issues to the existing shareholders in the proportion of 1 new share for every 2 shares held. You are required to calculate the value of the right if market value at the time of announcement of right is 576 and company is deciding to give 1 share of 100 at a premium of rupees 188 each. So what will be the amount of right issue? Amount. 1 share will be what? 188 or 288? Come on, solve this sum and give me the answer. We have already solved this, quite a few of them. I'm going to give you all only 1 minute to solve this. Come on, who is giving me the answer first? Wake up, all of you. All you all are not responding. So solve this, give me the answer only, then we may move forward. Otherwise, I think we are done because you all know everything. What will be the answer value of right? Directly tell me. You will take the amount of right issue as 288. Okay, so 288 plus 576 into 2, 1152. That will come as 1440. Divide that by 3. One price, average price will be 480. Now market price minus average price, that will give you the value of right. So 576 minus 480, 96 rupees. Okay. Come on. Next question. Question number 3. Following are the extracts of the balance sheet of OMG Limited. 8 lakhs is equity share capital, securities premium, general reserve and P&L account. A resolution was passed declaring 3 bonus shares for every 5 shares held. Using minimum securities premium balance to issue bonus shares, securities premium account will be debited by how much? Okay, bonus to held. There are 80,000 shares. So this will be 80,000 into 3 divided by 5. $80,000. 48,000 into 10. We need 4,80,000. Okay, so they are telling us to use security premium at the minimum. So fine, first I will use my general reserve. So 2,50,000 will go from general reserve. Then I will use my P&L 1,50,000. Okay, so 4,80,000 minus 2,50,000 minus 1,50,000, 80,000. That I will have to use from my securities premium account. Fine. Okay. Now question number 4 is a self homework kind of a question. You can solve it now. Okay, I'm taking a 2 minutes break before I start the buyback. Okay, so this you all can solve. Done? Over? Okay. Now I'm starting with part C, which is buyback of shares, which I've already given you an example. Now in case of buyback, okay, one thing I will just repeat. For buyback, we have option that you either do a fresh issue of new type of a share, new class of a share, or you use your reserves. Okay, some do the hybrid. Okay, they do fresh issue plus reserves. Okay, so in the problem they will tell you that they are doing a fresh issue to the minimum extent possible. Minimum extent possible. They will not give you the number of shares. You will have to find number of shares of fresh issue. So that you will come to know only after utilizing reserves. How much you are left, only that much of amount of fresh issue will do. Now in case of using the reserves, you can use only up to the nominal value of buyback. Okay, so if I tell you that buyback's nominal value is 1 lakh, plus I am giving them premium of 10,000. So you will not consider the premium, okay, you will consider the nominal value of buyback. That you can use, say, from a reserve called general reserve or profit and loss account, whatever. How much ever reserve you will use, nominal amount of reserve that you will use, that you will transfer it to CRR. Okay. So fresh issue, if they have told you that okay, do a fresh issue of 1000 shares of rupees 10 each, okay, if it is given, not a problem. They will tell you, or sometimes they'll tell you also this, so that you know how that okay, balance I need to remove it from the reserves. Sometimes they will tell you minimum fresh issue, so you will have to first use the reserves and then only you will come to know what will be the minimum fresh issue required. Whatever reserves you are using, the nominal value of that reserve being used for buyback, that you will transfer it to CRR account. Okay, so the working note for this amount of reserves you are using or fresh issue which you have to do is very important. So first we will read one question, we'll understand it practically. Okay, from the balance sheet of ABC Limited on 31st of March 2019, we have equity shares 50 lakhs rupees 10 each, general reserve, PNL, securities premium. Then we have 10% debentures, sundry creditors, bills payable. In non-current assets, we have fixed assets and investments, cash and bank balance, stock and debtors. The company decided to buy back 1 lakh equity shares of rupees 10 each at 25% premium. For this purpose, the company sold their entire investments here, okay, at 6 lakhs rupees, so that they have money to pay back the shareholders. And they made a fresh issue of 10% of preference shares of rupees 100 each to the extent minimum after utilizing the securities premium account and half of the general reserve. Pass journal entries and calculate the post buyback debt equity ratio. Okay. Now, first, okay, working note for fresh issue. Okay. Write down first amount required for buyback. That we are going to do with the help of fresh issue plus DP transfer to CRR. Whichever profits we are going to use, transfer to CRR. Okay, we are using both the methods. Now, amount required for buyback 1 lakh equity shares of rupees 10 each. I will need 10 lakhs. plus premium is 25%. I have to give premium. So this is 2,50,000 premium on buyback. Okay, they are telling that utilize the DP transfer to CRR, means utilize the reserves. They have given me securities premium and then half of the general reserve. Okay, now premium on buyback is 2,50,000, right? Securities premium account, there is some which is always there in the balance sheet, some I will get with the help of the fresh issue. Now fresh issue, it is not at a premium, so it is nil. In balance sheet I have got some 1 lakh rupees, and in the fresh issue it is nil. Okay, so 1 lakh is only the securities premium I have. I will have to use it for premium on buyback. Premium on buyback is 2,50,000. So I am yet a short of 1,50,000. From where will I remove this 1,50,000? From P&L account. Okay, so premium on buyback I will be able to write off with the help of securities premium and with the help of my P&L account. Okay, now how much is there in my profit and loss account in the balance sheet? In the balance sheet, plus there is a profit on investment. In my balance sheet, P&L is standing at rupees 1 lakh, I think so. Profit and loss account is 1 lakh, no? Here. 1 second. Just a minute. Okay. Sorry, but the screen just went off. Balance sheet plus profit on sale of investment. P&L account. Okay. On sale of investment. In my balance sheet, I have P&L of 1 lakh rupees and profit on sale of investment also I made 1 lakh. It was a 5 lakh rupees in the balance sheet. I sold it at 6 lakhs. That means there is 1 lakh profit. Therefore, I have P&L 2 lakhs. From that, I am going to use it for buyback premium 1 lakh 50. So now I am left with 50,000 in my P&L. This 50, I will use it for DP transfer to CRR. Okay, plus I will use general reserve, half of the general reserve. So how much is the general reserve I have with me? Okay, I will use half of it. It is given to me here. General reserve is 15 lakhs. So half of it will be 7 lakh 50,000. Okay, so general reserve will be 7 lakh 50. P&L I will use to 50,000 and 8 lakhs. They have told me minimum extent possible for fresh issue. So 8 lakhs compared with the nominal value of buyback. 10 lakhs minus 8 lakhs. 10 lakhs minus 8 lakhs. 2 lakhs will be my fresh issue. Okay, 2 lakhs. Now how will that be? It will be 2 lakhs amount of issue of shares. Okay, that will be the amount in rupees. 2 lakhs shares. 2 lakhs will be the amount. It is going to be made a fresh issue of 10% preference shares of rupees 100 each. So the number of shares will be 2000 into 100. Okay, and the name of the preference share is 10% preference share capital. Now I will be able to pass my journal entries. In my journal entry, the first one will be sale of the investment. I will get money first. Bank account debit. Okay, to investment account credit to P&L. There is a profit. Investment in my books is standing at 5 lakhs. I sold it at 6 lakhs. So my P&L, I am going to credit it by 1 lakh profit. Then I am going to do a fresh issue. Bank account debit 2 lakh rupees. It is not at a premium. Okay. To 10%. This is the name of my preference share capital account. 2 lakhs. Okay. Now I have to do the entry for due. Amount is due, no? So I am going to buy back equity share capital account debit 10 lakhs. Premium on buyback. Okay. Or you can directly use securities premium account. I have done premium on buyback account debit 2,50,000 to equity shareholders account. Okay, 12,50,000. Okay, now this premium on buyback, I have used my profit and loss account and I have used my securities premium account. Okay, securities premium, how much I had? I had 1 lakh in my securities premium. Balance I took it from P&L account. So that is now premium on buyback is written off with the help of this. Okay. Then equity shareholders account debit 12,50,000 to bank. I have to pay them, no? 12,50,000. Generally pay entry you will do it at the end. Okay, and then I have used general reserve account, I have used profit and loss account. It is DP transferred to CRR. Okay, general reserve I used only half, 7,50,000, and PNL whatever was left with me, 50,000. So DP transferred to CRR is going to be 8 lakhs. Okay. Now I have to calculate the post debt equity ratio. Okay. Now post buyback debt equity ratio. It is nothing but secured plus unsecured debt upon paid up capital plus free reserves. Secured and unsecured debt in our case is how much? Here, no? Secured and unsecured debt. Secured is 4 lakhs, unsecured is 10 lakhs. So it is 4 lakhs plus 10 lakhs. I am doing it here. 4 lakhs plus 10 lakhs. Okay, divide by paid up capital. Now my paid up capital will be from 10 lakhs I have already done the buyback. Plus there was a fresh issue of 2 lakhs. So subtract 10 lakhs and 2 lakhs. It will be 42 lakhs. And what is the reserve which I have with me? I have only got my free reserves. Free reserves is my CRR account. Okay. So I have got my DP transferred to CRR. So my CRR is going to come here. So I will have 7,50,000. Sorry, plus free reserve is only 7,50,000, not the CRR, not the capital redemption reserve, but the free reserve which is available with us. Okay. So 14 lakhs, 42 lakh plus 7,50,000. Okay. 14 lakhs divided by 49,50,000. 0.28. One second. .28 times. Post buyback ratio is secured plus unsecured debt upon paid up capital plus free reserves here. Post buyback debt equity ratio. Okay. Now I'm moving to another question. Okay. Question number 2. From following is the balance sheet of Light Company Limited as on 31st of March 2018. Equity shares is rupees 10 lakh, security premium 2.4, reserves. Then we have profit and loss, 11% debentures, sundry creditors. Assets, non-trading investments, stock debtors and bank. Company bought back 15,000 shares at rupees 40 each. Face value is 10. That means they gave a premium of 30 rupees. The transaction in the respect of buyback was financed by selling 2/3 of the non-trade investments for rupees 5.9 lakh. Show important accounting entries in the company to record the buyback. Now working note. Okay, amount required for buyback. Okay, amount required for buyback will be equal to fresh issue plus DP transferred to CRR. Now I am buying back 15,000 shares. Face value is 10. So 1,50,000 plus premium on buyback is 15,000 into 30. That will be equal to 4,50,000. There is no fresh issue. Okay, it is nil. Okay, so this DP transferred to CRR. Basically, I will be having 1,50,000. I have to compare the nominal value. Okay, but first, see this. Securities premium is whatever available in the balance sheet because I don't have any fresh issue. In the balance sheet, I have got 2.4 lakhs. Fresh issue, it is nil. Okay, from 2.4 lakhs, if I do minus premium on buyback, that is 4.5 lakhs, I am still remaining short of 2.1 lakh. That I can take it from P&L account. Okay, so now in the P&L account, I will have it from balance sheet and plus I have profit on sale of investment. Okay, now in our balance sheet, P&L is how much? 2.8. Investments I have sold 2/3. So 4.20 into 2 divided by 3. 2/3 of the investments I have sold for 5.9 lakhs. Okay. So 2,80,000 of my investments I sold for 5,90,000. So profit will be 3,10,000. So I will have total 3.10 plus 2.8, 5.9, and for premium on buyback I will use 2.1. So I will be left with 3.80 balance. Okay. So I can use P&L again for DP transfer to CRR, or I can also use it from the general reserve. So say I am using it from general reserve 1.5 lakhs. Okay, so that much I will transfer it to CRR. Okay, so then how much I will be left in my general reserve? General reserve account is 7,50,000 minus 1.5. So I will be left with 6 lakhs in my general reserve. If you don't happen to use general reserve and you happen to use P&L, that is also fine. Okay, because you have enough. After 5.9 minus 2.1, you already have 3,80,000. From there also you can remove 1.5. That is also fine. So whenever you are asked to make a balance sheet after buyback, so see to it whatever you are using, then you put the balance amount. Okay, so journal entries is very easy. Okay, now the journal entries for this. Question number 3. First one, I will sell my investment. So bank account debit, I am going to get 5,90,000. To investments account 2.80 to P&L, profit on sale of investment, which is 3.10. Then due to buyback entry, due entry, equity share capital account debit. How much? 1.50. Nominal. Okay, then I am giving them premium on buyback. 4.50. Okay, to equity shareholders account, that will become as 6 lakhs. Then you can do the payment entry immediately after the due or buyback entry. Equity shareholders account debit to bank 6 lakhs. Then write off the premium of buyback. How will I write it off? Securities premium account. How much I use securities premium? 2.4. Then I used profit and loss account to the extent of 2.1. Right? To premium on buyback 4.5. And last will be the DP transfer to CRR. I have used general reserve. So general reserve account debit to CRR. Okay, everybody. Clear till here? Okay. Question number 3. Okay. During the year 2018-19, T Limited did a buyback of 20,000 equity shares of rupees 100 each at a premium of 5%. The company did not have sufficient cash resources to buy back the equity shares. It issued 1,12% preference shares of rupees 10 each at a premium of 15%. Okay. How much will be the amount transferred to CRR? So amount required for buyback is nothing but fresh issue plus DP transferred to CRR. Correct? How much I required for buyback? Okay, 20,000 equity shares at rupees 100 each. Okay, so it is basically going to be 20 lakhs. For that, we did a fresh issue of 1 lakh equity shares of rupees 10 each, that is 10 lakhs. Okay. I am giving premium on buyback at the rate of 5%. Fine. And the preference shares are at a premium of 15%. Fine. But they are asking me how much is DP transferred to CRR. For DP transferred to CRR, I will compare the nominal value of buyback with the nominal value of the fresh issue. So 20 lakhs minus 10 lakhs. So DP transferred to CRR will be 10 lakhs. Okay. So now this 10 lakhs they can use it from general reserve account. Okay. They also have got no securities premium also there will be there. See, I'll show you this in detail if you all want to. Premium on buyback is 5% of 20 lakhs. Correct? So that comes to 1 lakh. And premium which I will get on fresh issue, it is 15% of 15 lakhs. No, sorry, 15% of 10 lakhs. That will be equal to 1,50,000. Right? So I will be left with premium on buyback when I will write off. I will be still left with 50,000. So I can use my securities premium for buyback nominal value. Okay. So I can use 9 lakh 50 from securities premium. I will use 50,000, and from general reserve I can use 9 lakh 50,000. Securities premium amount can always be used for buyback of equity shares, nominal DP transferred to CRR. The same thing is not possible when you are doing redemption of preference shares. For redemption of preference shares, security premium you basically use for writing of the premium on redemption. Okay, securities premium over here in buyback is different because that is all for the shareholders. It is the amount available for shareholders. For my preference share, redemption of preference shares also it is the same thing. Just a little bit of change of securities premium. Okay, how I use securities premium over here for DP transfer to CRR. You cannot do that in for preference shares. You can use security premium for writing of the premium on redemption. Okay. But not for as a TP transfer to CRR. You can watch my lectures from the dream batch for redemption of preference shares. Come. Now the next question. Following are the extracts of balance sheet of Tube Limited, equity shares of rupees 10 each, security premium, reserves, PNL, bank non-trading investments. Company brought back 30,000 shares at rupees 40 each, and buyback was financed by selling non-trade investments, 2/3 of non-trade investment at rupees 11,80,000. Calculate the bank balance after buyback. Okay. So first the opening balance of bank is 18,20,000. Okay. Then I will add amount received on sale of investment 11 lakh 80,000 minus amount paid on buyback. How much I am going to pay on amount? On 30,000 shares I am going to pay 40 rupees each, 12 lakhs. So the amount of bank after the buyback will be 18 lakhs. Simple, no? The question is easy. 3 marks, 3 to 4 marks, like that only. Come on. Now the next question. Okay. Following information is available of TH Limited. Equity share capital is in lakhs. 30,000 lakhs. 3 lakh shares of ready security premium, general reserves, secured loans, unsecured loans. Calculate the maximum limit up to which buyback is permitted in the financial year. Now there are certain conditions for how much the buyback can be done. The least of that amount then is selected. Okay, generally 25% of the shares you can buy back. So say there are 300 lakh shares. Okay, 3000 lakh shares into 25%, I will say 750 is the number of shares which you can buy back. 7500. Sorry, 3000 into 25%, 750. Correct. So that many shares you can buy back. Now, however, there are conditions in which buyback can take place. You have to take the least of all. First, find the first condition. Buyback of equity shares, okay, in any given financial year, okay, should not exceed 25% of its total paid up capital, paid up equity share capital amount, paid up equity share capital. So now my equity share capital of that financial year is 30,000 rupees, 30,000 in lakhs, into 25%, 7,500 lakh rupees. Okay. Second condition is 25% of aggregate, total. Aggregate means total of paid up capital plus free reserves. Now paid up capital is 30,000. In free reserves we have security premium, then we have general reserve. Okay, 3,000 security premium and we have 10,000 as general reserve. Okay, into 25%. So this will come up to rupees 10,750. Okay, and the last condition is that the post buyback debt equity ratio, post buyback debt equity ratio, okay, of the aggregate secured plus unsecured, okay, owed by the company after the buyback is not more than twice of its paid up capital and free reserves, aggregate of paid up capital and free reserves. For example, here let the amount of buyback be X. Okay, so secured plus unsecured liabilities upon paid up capital plus free reserves should not be more than, means it should be less than or equal to 2, twice. Okay, so now here we have secured and unsecured, we have total is 62,000. See, in the balance sheet, secured plus unsecured is 62,000. So I am just taking that. 62,000 divided by paid up share capital is 30,000 lakhs. But if I will do a buyback, so I have done X plus free reserves is 3,000 plus 10,000 minus X. I will have to from reserves only this amount will go na, less than or equal to 2. So here this will become 62,000. When you will solve this, it will be 30 plus 3,000 plus 10,000. Okay, so it will be 43,000 minus 2x, 1x plus 1x minus 2x, less than or equal to 2. So basically it will be 62,000 equal to 2. You can take this 43,000 minus 2x. I am just putting it in the equation. 62,000 equal to 2 into 43 will be 86,000 minus 4x. 62,000 minus 86,000 is equal to minus 4x. So 86 minus 62 minus 24,000 is equal to minus 4x. Minus and minus sign cancel. 24,000 divided by 4 is equal to x. Therefore, x will be 6,000. Okay. So, this is one. Let the amount of buyback which we did, no rupees. So, which is the least? 6,000 is the least amount. Okay. Therefore, since the least amount, least of all three conditions is rupees 6,000 lakhs. Okay, and what is the amount of shares value? Each share is 10. Therefore 600 shares can be brought back. Bought back. Okay. So this is one, you know, in case of when they give you the conditions of buyback. So 10 rupees value each. Alright. Now now similar question is being asked. Paid up equity share capital is rupees 5 lakhs. Okay. Having face value of rupees 10 each, fully paid up, and then the other details they have given me of the reserves. Now the board of directors wanted to pass a resolution to meet the buyback maximum number of shares allowed. Now I cannot do my debt equity ratio or anything in this. Okay, so basically the amount of buyback which will be allowed is 25% of the shares which are there. Okay, 25% it will be. So what is the 25% of? It will be 5 lakh shares are there, no? 5 lakh shares into 25%. This is the amount of buyback which we can do. 1,25,000 shares can be bought back. No other details are given. So we will take, this is the maximum number of shares which can be bought back. The one which we were doing was the amount. Least of the all three conditions is the amount available for buyback. So if the value of buyback would have been 50, in a previous sum we would have taken that minimum amount and divide by 50. It was 10, nothing else was given, I divided by 10. I am assuming that the buyback is at par. Okay, so that was for the amount. Here the number of shares which can be bought back here is directly only you can do 25%. Okay, no other details have been provided. Now the next one is Negi Limited had 90,000 equity shares of rupees 100 each. They are fully paid up. Company decided to buy back 10% shares at par by sufficient number of preference shares. Company do not have any reserves. How many preference shares are required to be issued if new preference shares are issued at 10 rupees each? Okay, now 10% of the shares they want to buy back. Okay, 90,000 into 10%. That means the company wants to buy back 9,000 equity shares at par. okay, into rupees 100. So 9 lakh is the amount required for buyback. Okay. Now they have telling me that they are supposed to issue preference shares which are required to be issued at rupees 10 each. So fresh issue is at rupees 10 each. So 9 lakhs divided by 10. 90,000 shares, new shares will have to be issued for this amount of buyback. Okay, divide by 10. Number of amount required for buyback divided by the value of the shares. Okay, if it would have been issue price, basically we always do value divided by the issue price only, then we will come to know how many shares can be issued. Here the issue price is 10. It is not at premium. Fresh issue of preference shares is at rupees 10. Say it would be at a given premium or something, then we will divide that by the issue price. Okay, to get the correct number of shares to be issued in case of a fresh issue. Clear? So this is it with your buyback, right and bonus shares and issue of shares. Now this buyback, right and bonus shares together collectively is like for 5 marks, 5 to 7 marks. Okay, so you have to complete that and you can solve more from the dream batch. On Wednesday I will see you with other important chapters. Okay, bye bye.